is locking the shop again. I think those tax people are here and he is running away from them as usual. The last time I confronted him, he confided in me. He said he had paid to some men wearing red t-shirts. According to him, it was cheaper and they gave him a fake manual receipt. As for me, Naemeka, man, there is no need to run. I pay my tax right here from the comfort of my shop.
You don't mean it.
Make we pay our tax. Yes, so be like a maker. Pay your taxes at any commercial bank close to you. Crutech, Econdo, and Unical Microfinance banks, or via POS at IRS offices. You can also pay your tax online via quickteller.com/CrossRiver MSA. Collect your e-tickets immediately and obtain your receipts at CR. Don't pay money to anybody. Pay your tax with ease. For more information, call 0802-567-0608 or 0806-627-6829. CRIRS. It all starts with your tax.
This message is brought to you by Cross River Internal Revenue Service.
Okay. Very light. You tell us type. We say question. You now our team will go and tell them another question. So in maybe the 5 minutes back time, maybe we'll start our chat. 5 minutes back time, maybe we'll start as engaging team. careful no more. Okay, check it there. Sir, is your camera off? What's the meaning? Is it early?
How is not in the shop again? I think those staff people are here and he's running away from them as usual. Last time I confronted him, he confided in me. He said he had paid to some men wearing red t-shirts. According to him, it was cheaper and they gave him a fake manual receipt. As for me, there is no need to run. I pay my tax right here from the comfort of my shop. You don't mean me. We pay. So, be like a maker, pay your taxes at any commercial bank.
The mic.
Office. Don't
The only man that will never. Yeah, you are. Yeah? My brother. My brother. We're going to use one now. I don't know. Can you use one now? Who asked you to do it? For asked you today? No, it's only for when we are this one. That was the MIE is on my PRS. They are the only question I'm giving out. Okay. Questions out. Okay. Even then, well, yes, they wrote. You can use the system now and just be copying out. Use this one now. Use this one now. This one. I don't know. But as I just go and I want to open up. He just come out. The audio, talk to the mic. Talk to the mic. Wait.
Sound check, sound check.
Is there? The one playing there now. Not reaching it. This is not on now. This one is the input now. Any color with it. This is color. Which stage? So are you okay now? All right, get the microphone. Let's see. Okay. Is it this one now?
Next month. Where something? Why you still they are paying from the business. So you be doing like
Why is not paying? From here now. From here.
Hello, sound check, sound check. Please, for all those who are online, please confirm if you can hear us. May end. Sound check, please. We need response from online. Those who are online, can you hear us, please? Sound check, sound check. If you can hear us, please thumb up, please.
Yes, I can hear you.
We need someone online to confirm, please, if you can hear us. It's a sound check, please. Sound check, sound check.
We can hear you loud and clear.
Sound check, sound check.
Did you hear me? Did you hear me?
Yes, that Phil, we hear you very well. Yes,
All
we
right,
can.
thank
Can you hear us, please?
Yes, very well.
Thank you.
Distinguished guests, ladies and gentlemen, I'd like to welcome you to today's session. I'd like to very quickly invite for the opening prayers Pastor Samuel, Director of Finance and Supplies, Cross River State Internal Revenue Service. Pastor, please. Shall we rise for prayers?
Eternal Rock of Ages. Father, this morning we thank you for your special grace upon our lives. Father, for sleeping and waking up is a mystery. Father, we thank you for gathering us again today for the second day of this program. We thank you especially for the successes we recorded yesterday. And Father, we rededicate and commit this program once again to you. We pray for your leading, we pray for your guidance and your direction. Most importantly, Father, we pray for your wisdom for all the discussants and all the paper presenters. Now, at the end of the day, Papa will be well informed, better than when we came. At the end, Father, we return the glory to you. Our prayer is in Jesus Christ's name. Amen.
And amen. Ladies and gentlemen, once again, I'd like to welcome you to the Nebula Hall here in Aksari Hotel, the venue for the 2021 Annual Tax Week with a theme, Understanding Emerging Issues in the Nigerian Tax Environment, Enhancing Voluntary Compliance, organized by the Cross River State Internal Revenue Service in collaboration with the Chartered Institute of Taxation of Nigeria, CITN, Calabar, and District Society. Distinguished guests, ladies and gentlemen, before we get the welcome remarks, permit me to quickly and in a very special way acknowledge the presence of the Deputy Vice President, CITN, Mr. Innocent Ohagwa, FCTI. May I also ACTI Deputy Director, Research and Professional Standards Secretary. Is he here? Thank you. Let me quickly acknowledge in a very special way Comrade Chief Akpe Ogon, Chairman, Calabar and District Society. You're welcome, sir. May I especially acknowledge the presence of Barrister Alex Isamu, Vice President, Joint District Society. You're welcome, sir. Ayete Nengi, FCTI, Chairman, Bayelsa and District Society. You're welcome. May I, in a very special way, acknowledge the presence of the Managing Director, Essien Ukorobi and Co, former Chairman, Cross River State Internal Revenue Service, Elder Essien Ukorobi. We also like to acknowledge the presence of Elder Dan Oko, Managing Partner, Dan Oko. Welcome, sir. May I also acknowledge the presence of the Managing Partner, Ayamba Hakot and Co, former Commissioner of Finance, Cross River State, Mr. Kelly Ayamba. Sir Dinas Ikara, all the way from Macrot Technical Value Services. Thank you very much, sir. Thank you. Let me quickly acknowledge the presence of Dr. Mrs. Obal Osang, FCA, FCTI Coordinator, Society for Women in Tax. Welcome. Sylvester Macron is also acknowledged, CEO, APMAT Limited. So acknowledge the presence of the Acting Director, PRS, Federal Inland Revenue Service, Tezungwa Asay. You're welcome, sir. Thank you. Thank you. And on a very special note, okay, Right Honorable Dr. Basi Ibo, former member, Cross River State House of Assembly. Are you here? Let's put a hand. All right, thank you. Thank you very much. Very specially, let me acknowledge the presence of the Chairman, Cross River State Internal Revenue Service, Mr. Akpanke Oga. Let me quickly use this opportunity in acknowledging all other directors, stakeholders, and taxpayers here present, members of the press, very distinguished guests, ladies and gentlemen. Once again, good morning and welcome. Distinguished guests, for the address this morning, I'd like to invite a man that I describe as someone who has a fulfilled career, especially after rising to the peak of the civil service of Cross River State, a traditionalist, a successful family man, a retired permanent secretary in the government of Cross River State. Ladies and gentlemen, let's welcome to the podium for opening remarks the Chairman, Calabar and District Society, Comrade Chief Akpe Ogon.
Good morning, ladies and gentlemen. On behalf of the hosts of this event, the Cross River State Internal Revenue Service, and the Chartered Institute of Taxation of Nigeria, Calabar and District Society, I wish to welcome you to today's session. Right from Monday through yesterday till today, we have been looking at the emerging issues in the Nigerian tax environment and how to enhance voluntary compliance. Those who were here yesterday have confirmed that yesterday's presentations, discussions, and interactions were very inspiring. They were insightful. They were elucidating. They were very informative, very instructive. They were very educative. That's the foundation we have built on. And today's presentations promise to toe that line. We're going to build on that foundation. Therefore, we assure you that today's presentations will be very rewarding, particularly as today is the bottom pot. And those who are very close to the kitchen know that the bottom pot food is always the best. Stay with us to the end, and you will eat the bottom pot part of it, and you will be better for it. I wish to also inform us that the IRS in Cross River State is increasingly digitalizing its operations. Today, we will be introduced to part of that so that in the comfort of our houses and offices, we can seamlessly file our returns. You may not need to move from your house or from your office to the Internal Revenue Service office before you can file returns. You don't need to go and queue. We are doing this so that it will be seamless and voluntary compliance will be enhanced. So be very attentive because it is going to be very rewarding. It will reduce the time and cost. So this platform that has been created for us will surely reduce the time and cost of doing our work for our clients, for ourselves, and for everybody. And all of us, stakeholders in the tax environment, will be better for it. Let us utilize it effectively. There is also a table there where, for those of us who don't have the taxpayer's identification number, just go down there and one will be created for you. Please, it is free. You don't need to pay anything to get your taxpayer's identification number. Let me also inform us that we are going to come out with a communique at the end of the bottom part today. The communique is already being worked on based on our interactions for yesterday. If you have any issue you want to be included in the communique, the man just walking in, Mr. Matthias Ashibe. Am I seeing you well? Is that Matthias? So that is the chairman of the communique drafting committee. Whatever input you have, submit to him. They will review, and by the time we are rounding up, we will hear all that we have discussed and agreed on. If we do that as we progress, it will be easy. It will help us to round up in good time. I wish to also use this opportunity to inform you that this bottom part session will climax with a session for special awards to deserving or outstanding taxpayers in the two categories of individual taxpayers and the corporate category. 5 people have been selected from each of these categories based on the records available in the Internal Revenue Service. If you have not won, you're not one of them this year, you may be one next year. This is to encourage you so that you will do well. You will voluntarily comply. And if you do, it will help you to win the award next time. Thank you for coming. Thank you for giving us your attention and interest. Because we are sure with that attention and interest, learning, very effective learning will take place. Without interest and attention, learning cannot take place. We implore you to be very interested and be very attentive. You are all welcome. Thank you.
Thank you very much, Chief Akpe Ogon. Distinguished guests, ladies and gentlemen, very shortly we'll go into the main matter of the day, but at this point we'd like to call for a tea break. We'll go for a tea break before this session proper. While we're going for the tea break, I'd like to remind us again of a communique drafting committee. Just like Chief had mentioned, Mr. Matthias Ashibe is the chairman. We also have Barrister Patience Egu as secretary, Mr. Ivabo Ivare, a member, Mr. Kon Nioye, also of Essien and Co as member, Mr. Godson Osemene as member, Mr. Iyokun, and Mr. Monday Okonafu also as members, please. Okay, and here we're not set for tea break, so with your kind permission, I ask that we go straight into our first paper. Our first paper presentation will be on the implications of Finance Act 2020 on personal income tax. And sorry, I hear tea break is not, we are not ready for tea break. Sorry, sincere apologies, please. Sincere apologies. I've just had information that we are not ready. The table is not set for the break. Sorry. So with your permission, we'd like to start with the paper presentations. Fine. Our first presenter this morning will be talking on the implications of Finance Act 2020 on personal income tax. And the topic will be handled by Dr. Mrs. Obal Usang, FCA, ACTI, Coordinator, Women in Taxation. CITN. Can we please put the hands together for her? Distinguished guests, ladies and gentlemen, profile of Dr. Mrs. Obal EU Usang. Mrs. Obal Usang is a chartered accountant and a researcher with special interest in audit and taxation. She holds a doctorate in philosophy in accounting from the University in Malaysia. She is the Institute of Chartered Accountants of Nigeria and an associate of the Chartered Institute of Taxation of Nigeria. She's also a member of the Nigerian Accounting Association, NAA. Dr. Sang is a senior lecturer in the Department of Accounting, University of Calabar, where she is involved in the training of young accountants and undertaking research into audit and taxation. She's well versed in research. She has been the chairman faculty research committee in the Faculty of Management Sciences till date. Bringing in more than 10 years of experience, she has been involved in the coaching of young academics at the undergraduate and postgraduate levels. She is the immediate past head of Department of Accounting, University of Calabar, Calabar.
Thank you very much. Distinguished guests, good morning. All protocols duly observed. So my task this morning has been made easy because one of our presenters yesterday touched on some of the things I'll be talking about. But in my presentation, this is what I did. I am aware that we had Finance Act 2019 that had some sections of PITA, that's Personal Income Tax Act, amended. And then in 2020, more amendments were made to other sections of PITA and correct some errors that were carried in the previous amendment. So I will be looking at all the amendments, not just the ones that were talked about yesterday. So I hope you follow me. So the next slide. So my outline, as I've already explained, I will look at both the Finance Act 2019 and the current one, and we'll look at all the amendments that have been made. Next slide. So now, just like we had yesterday, Personal Income Tax Act is an act that imposes income tax on individuals, communities, families, executors, trustees. And the next slide. According to the Act, an individual consists of every individual other than the person covered under paragraph B. Next slide. If we go to paragraph B, these are the group of the other individuals the Act is talking about. Persons employed in the Nigerian Army, Navy, Air Force, Nigerian Police, and then officers of the Nigerian Foreign Service, every resident of the Federal Capital Territory. What this means is that for Cross River State, for example, Cross River State, its own jurisdiction is for those who live here who don't fall under this category. If there are people living here who fall under this category, the Cross River State Internal Revenue Service is not their relevant tax authority. Okay, I hope you understand what I mean. Next slide. So, therefore, all individuals resident in the state for a particular year of assessment are liable to pay tax to the Cross River State government except as specifically listed in that paragraph B. All right, now the very first amendment I have here is on Peter, section 20, subsection 1G. And that has to do with allowable pension contribution. You know, in the previous Peter, there are certain bodies, if you deduct and contribute your pension to them, such deductions are not allowable. So, but with the Finance Act 2019, a section of the Peter section 20 subsection 1 was removed, where you have, it now stopped at scheme. The other part where you have approved by the board, subject to, and all that was removed. However, there was a little error there. Instead of provident, it was captured provided. Please, what I have in the second part there is that this has been addressed. It's not provided, it's provident. So it now reads a contribution to a pension, provident, or other retirement benefits fund, society, or scheme recognized under the Pension Reform Act. With this, please, same slide, don't move yet. With this, that paragraph in the 2019 amendment actually removed the absolute power of JTB for approval of any pension, provident, or other retirement benefit fund. And then this current amendment has repositioned the Pension Reform Act. We didn't used to have that. So, but with the Pension Reform Act, you know, the act now governs, you know, where approved pensions, approved contribution to a pension fund should be. And with that, if you are, right now we have a lot of pension fund administrators. So if your organization is subscribed to any one of them, whatever deductions you make for your staff will be allowed as deductions for them. Next slide. And then we have section of PITA. PITA means Personal Income Tax Act 2004 as amended. We have sections 2, subsection 2, section 49, subsection 1, section 86, subsection 2A, section 8, section 102, subsection 1, and section 108, subsection F. All these sections had the words the Federal Board of Inland Revenue. So in 2019 amendment, Federal Board of Federal Inland Revenue Service was substituted. It was replaced. Federal Board of Inland Revenue was replaced with Federal Inland Revenue Service. And then in 2020, Finance Act Section 23, 48, 73, 86, 89, 93, 106 subsection A were amended, replacing the word board with service. And in 108, there was a new definition for board, which is JTB, and then another definition for national minimum wage, which we heard yesterday when the presenter was doing some discussion here. So the implication of the first part is that, you know, before this amendment, there was this confusion in the PITA. You keep having Federal Board of Inland Revenue. Meanwhile, their name had been changed to Federal Inland Revenue Service. So right now, that controversy over their name has been laid to rest. Next slide. And then in Finance Act 2019, this issue of new trade was amended in the company sections of the company income tax. So, but in Finance Act 2020, the amendment affected the Personal Income Tax Act. Previously, when it concerns commencement of business, those of us who know how it's done, the first year we are told is from when the business started to 31st of December of the same year. Then the second year of assessment will be 12 months, beginning from when the business commenced. And then the third year on a preceding year basis. So you discover that when you look at the basis period based on the old rules, you have overlapping basis period, and then the same profits are taxed 3 times, okay? So there was so much double taxation going on. So, but with the new rules, these are the new rules. The first year, the assessable income shall be income from the date on which the individual commenced such trade to the end of his first accounting year. So now there is acknowledgement of the accounting year of that organization, of that business, not to December like it used to be. And then the second year, it will be, for the second year, the assessable income shall be the income from the first day after the trade or business first accounting period. So let's say the first year, they commence business in May, and then the accounting year end is October 31. So for the second year, it's going to start from 1st November, the first day after the end of the previous accounting year, you know, like that. So that way, the overlapping basis period we used to have in the previous rules are completely eliminated. And so the implication is that the taxation of all the profits of the same profit for three times is no longer there. So they only pay taxes for what they have earned for each of the year of assessment. Next slide. Also, it also affected cessation of business. And in the previous section of section 25 of PETA, you have the ultimate year, that's the year in which the business ceased. And the rule used to be the income for that year, meaning from January to the date of cessation. So, but with the new, and then the penultimate year, the year before the business ceased, this is what used to be done. The assessable profits will be calculated based on the preceding year basis as well as the actual year. And then whichever is higher will be taxed. So, but now, with the Finance Act 2020, the rule is that where a company permanently ceases to carry on a trade or business in Nigeria, its assessable profits therefrom shall be the amount of profit from the beginning of the accounting period to the date of cessation, not just the year. If our accounting period started, like the earlier example I gave, accounting period starts, say first, it ends always in October. So it starts 1st November. So it will be from, and let's say in the following year, we cease business in April. So it will be from 1st November to the date in April when we ceased, not 1st January of the new year to the date in April when we ceased, like it used to be. So those are the changes we have there. So the implication is that if previously you observe gaps, you know, when it comes to cessation of business, but right now such gaps have been eliminated. So you can, if you know how to work them, you know, we lecturers, we do workings in class. So you can actually develop a hypothetical question and see how it works and see how, compared with what used to be and what it is now, you see that all such gaps have been eliminated. Okay, next slide. And then we have section 33, subsection 456. That section used to talk about allowances to a taxpayer. We used to have children allowance, 2005 for each child, maximum of 4 unmarried children, alimony to a former spouse, 300 naira, dependent relative, 2,000 naira, maximum of 2 dependents, and so on. So, but the Finance Act 2019 actually deleted those sections 4, 5, and 6. And then, of course, in 2020, there was a broader definition of what income consists of, global income now. Now, what's the implication of the deletion of section 456? You know, when the amendment of 2011, the amendment we had to PETA in 2011, they brought in what was called, or what is called, consolidated relief allowance. And then these sections 4, 5, 6 were still intact, untouched. And so there was this controversy over whether the consolidated relief allowance should be granted alongside with children allowance and other allowances the way we used to have. I understand that some state internal revenue service, because those sections, nothing was said about them, they still use their discretion to grant those allowances alongside the CRA. So, but with the deletion right now, if you are in a state where you were granted CRA along with such allowances, then you have to pay more tax because those allowances now have been eliminated. And what you have is a consolidated relief allowance. And then you have, if you are contributing to NHIS, NHF, National Housing Fund, and if you have a life assurance policy, the premium you pay, and so on. Those are the ones that you'll be granted relief for. But for all this one, children allowance and all that is no longer there. Okay. So the deletion of the subsections has put the issue to rest. Consequently, the taxpayer who has been enjoying those along with CRA is exposed to paying more tax as there are less fees to be claimed. Next slide. And then we have Peter subsection 49, section 49, subsection 1. The old subsection 1 of Peter requires a person engaged in banking to make monthly returns regarding new customers of the bank, the relevant tax authority within the first week of the month, specifying their names and addresses of the new customers. Now, in the Finance Act, section 28 of the Finance Act, a new subsection 1 was inserted, which states that a person engaged in banking shall require that a person intending to open a bank account for the purpose of a person's business operation shall provide a tax identification number as a precondition for opening or continuing operating of such bank accounts. This applies to companies. Now it also applies to individuals who are into business, because within us here, we have those who are into businesses that are not incorporated. So if you are into a business and you are not a company, you are required by the Act right now to make sure that your business account you submit your tax. If you have been operating your business account, you are now required to go and give your bank your tax identification number. And if you don't have a business account, you are required to open one and also supply it. In fact, they won't even open it for you if you don't give them a tax identification number. Now, the implications of this, I believe that this amendment was made so that more people can be, or more persons can be dragged into the tax net by the relevant tax authority. However, where potential taxpayers perceive this move as tax related, of course, they will perceive it. Once you say tax identification number, that already tells them that it's for tax purposes. Once they perceive that it is tax related, it can further dissuade them from the desire to operate bank accounts. And this is particularly important in demystifying the taxation of underground economy, as many under this category are yet to be captured. The underground economy in our country is still very large, largely untapped, because of the way their transactions are. So I don't know what the Internal Revenue Service will do about this thing. In as much as you want to drag more people into the tax net, I know that tax is a statutory obligation of every citizen, but the way and manner we go about it will also affect how much success we'll get in this area. Maybe we'll start thinking of other ways of, making the people in the informal sector to be more responsive to taxation. I know there is something called presumptive tax, because they don't have books of accounts and all that. It was okay, you group of mechanics pay this. It's still not enough, because there is no equity in that. If we are all 10 mechanics and we are in a group, and then you say we should pay, let's say, 500,000 as our tax for the year. Within the group, there are some mechanics who are more successful than others. So how do you capture them? How do you extract more from them? So we need to think about that so that we can find ways of bringing all of them to be accountable for their taxes individually, not as a group. Next slide. And then we have section 58. This one was talked about yesterday, and it has to do with how taxpayers respond or deliver their notice of objection. In the previous section of Peter, we are told that there should be the notice to the relevant issue. He may apply to the relevant tax authority by notice of objection in writing. But in the new Finance Act, certain words have been inserted. After writing, the words delivered in person by courier service or via electronic mail has also been inserted. So the taxpayer has the option of delivering his notice of objection, either physically goes there to drop it, or sends it by courier, or sends it by electronic mail to the official mail of the relevant tax authority. And in law, all those means of sending the notice of objection are valid. Okay, so this, I believe, is in recognition of the advancement in communication technology. It shouldn't be the old way. As we advance in technology, our processes too has to also change to conform with current situations. So, and this has streamlined the mode of delivery of the notice of objection. Next slide. Then we have section 37, minimum tax. In the previous Personal Income Tax Act, section 37, it talks about minimum tax. And what used to happen is that if after somebody has been granted all the allowances and everything, and the allowable deductions and so on, at the end of the day, we don't have any chargeable income. In the previous section, such a person will be subject to a minimum tax of 1%. Or if at the end of the day, we have given him all the allowances and every relief he needs, and then the tax payable is less than the minimum tax of 1% of his total income, he will pay if you are earning 30,000, you are not supposed to pay tax. Although you will still, your employer should be able to file your returns for you, or you file your returns by yourself for self-assessment. Okay, next slide. And that one applies to people in employment. If you are not in employment, it may be difficult for the relevant tax authority to determine whether you are actually earning only 30,000 per annum. Tax and remit same to the relevant tax authority. Now, in this section 74, subsection 1, you have, under that, you have section 69, 70, 71, and 72 of the Act. But in the new Finance Act, section 74, subsection 1 was amended. And instead of all, like on this side of the slide, the blue side, you see 69. And treats any person or body corporate who being obliged to deduct tax under section 69, 70, 71, 72, or 73 of this Act fails to deduct, and so on. So what this insertion has done is that It has empowered the relevant tax authority to recover income tax assessable on a person, whether an assessment has been made from any payment made by any person to that person. So there is penalty and there is a power now given to the relevant tax authority to make sure they recover such taxes from such a person. Next slide. And then we have amendments to the third schedule of Personal Income Tax Act.
Are we on tea break?
Our panelists include a former Commissioner for Finance, Cross River State, and a newly past Chairman, Calabar District Society. Let's welcome Mr. Kelly Ayamba. May I also invite the Acting Director, Planning, Research and Statistics, Federal Inland Revenue Service, Mr. Tezungwe Ase. I'd also like to invite Honorable Basi Ibo, former member, Cross River State House of Assembly. Please join us up there. The fourth member of the panelists will be joining us via Zoom, and that's Chief Ubani Esquire, Managing Consultant and CEO, Macropt Technical Value Added Services. Let's put our hands together for him. He'll be joining us via Zoom. Thank you. I'd like to very quickly hand this over to the moderator. And we have the second microphone, please. And we have the second microphone.
Good morning, ladies and gentlemen. The presenter of this paper has done justice to it. Be that as it may, where participants will need more clarification. Please, if you have any question down there, put it on paper and send it to the table in front here. They will bring it. But before your questions start coming, there are some questions here. And we will start with this one. The panelists are ready. The first question here, no question is stacked against anybody. To save time, we will take contributions from not more than 2 panelists for each. What I have commenced the implementation of the Finance Act 2020. As they commence implementation of Finance Act 2020, what are the challenges that we should watch out for? Over to you. Panelists. All right, maybe the presenter will want to answer the question first.
Thank you very much.
Sorry, but the panelists have already been introduced to us. Number 1, Mr. Kelly Ayamba. Number 2, Right Honorable Basi Ibo. And Tezungwe Ase. You're welcome. So the presenter.
Thank you very much. Well, one of the challenges I envisage out of the Finance Act 2020 on employers, particularly, you know, when something new comes up like this, sometimes it takes a while for us to begin to see changes in organization. Although, like they usually say that ignorance is not an excuse. So, but I think the tax authority will begin to find that some organizations are completely ignorant of some of the provisions of Personal Income Tax Act as it concerns their employees, which is why the program is organized to sensitize employers and other stakeholders in tax. particularly. So maybe you may see defaults here and there or inaccurate calculations here and there coming to you. So you have to watch out for that. But I think between last year and this year, we've had Finance Act, Finance Act, Finance Act. But I believe that there will be a lot of organizations who are still trying to come to terms with the changes we have seen. And their returns will tell you whether they have applied the changes we are talking about or whether they haven't. Thank you.
Thank you. For me, the key challenge will be information, education, and communication. First, that the information is shifted in such a way that it is very clearly, comprehensive, so that the taxpayer is not as sophisticated as the tax administrator. So the information must be brought to that level. That first challenge. Second challenge is getting this message effectively across to them. The speaker, when she was delivering her paper, you need to, when we are engaging, we need to put a human face, because people have been persuaded to comply. So you need to be able to put this engagement in such a way that they feel the willingness to comply. And for me, it's about a shift from the demand that pay your tax because government will use it to provide infrastructure, to provide services, to pay your tax because government is providing services. It's very key. The people must see that government is providing services, not to be made to, put the ability to comply on the hope and expectation. So, an issue of eyes and ears.
Thank you. I think a lot has been said already. The challenges, of course, like the presenter said, these are new development, new changes, and everybody will need to brace up. I think that's why we are here. So I think part of the challenge is being tackled now, the challenge of information and enlightenment of taxpayers. But having said so, I think the taxpayers themselves will have the challenge of being able to properly interpret the provisions, the new provisions, and to apply same in filing their returns. What that means is that most taxpayers will need the services of tax consultants. And I think that for us who are professionals, we should brace up for that. And for those who have clients, we should be able to study the provisions very carefully so that we can advise our clients accordingly. There are new provisions, a lot of changes, especially on the issue of the basis period, the computation of tax payable for commencing and seasoned businesses. Those are technical areas that will need good and proper interpretation. And I think that taxpayers should be willing to, I'll encourage taxpayers who are here, you should be willing to engage the services of professionals to help you out, because it's actually less expensive to engage professionals than to face, if there's no human face, to face the tax authority, because they can be very inhuman sometimes because they have to meet their targets. With due apologies to the IRS people. So everybody needs to brace up. The challenges are there, but nothing too spectacular. What we need to do is prepare for them and tackle them accordingly.
As a tax practitioner, I would like to look at the challenges from the implementation angle. Some of the sections, especially in the law, in the tax laws, they have introduced some thresholds for taxpayers. By the Finance Act, companies that have turnover of less than 25 million, they are exempted from paying tax. But to identify those taxpayers that have less than 25 million turnover, are we talking of the turnover for last year, the last accounting year, or is it the current operating year? And how do we determine that turnover for this year? And what if by last year the turnover was less than 25 and this present year the turnover will potentially be about 25 years? How are we going to treat that? Then when you talk about VAT, in filing VAT, you have to claim your input VAT. So now, if you have if your turnover is less than 25 million, so you will not file for VAT, you will not collect VAT from your customers. But what if you paid VAT on your inputs? How do you claim those VAT if you are not filing for VAT? So these are the challenges that we may face or are facing in implementing some of the provisions of the Finance Act. They have talked about much, so I'll leave it at that.
It's okay. You will agree with me. Both the presenter have done justice to this. On the turn of the Finance 2020, how has the advent of COVID-19 pandemic impacted on the implementation of 2020? So we will start again. Anyone who is ready can pick it.
The first is from the fact that the way we do business has altered, particularly for services. It is possible today for me to stay here and do a consultancy for a client without moving out of my office. And that makes it difficult for tracking my earnings usually, because before COVID, you are physically present in the client's office. A lot of things are obvious that you are doing something in such location, and then it is possible for somebody to monitor what you are doing and the output and all things like that. But today, it is between you and the client, and it creates room for leakages. It creates room for the fact that tracking will be very difficult. So the onus rests more on the service provider, for instance, the professional, to be truthful, to disclose, which ordinarily would have become an issue that will be glaring to people, because you no longer need the crowd. Even if it's involving a team of personnel in an office, they could also be engaging with you from their homes virtually. So nobody really knows that something is going on the then because of that, getting to these thresholds becomes a challenge. Because how do you now do this assessment that establishes that for this tax year, this is the level of earning that I have accrued for me. So COVID-19 created this new normal of employment, of work ethics, and makes it difficult for a number of things to be very visible. So it's a movement from visible practices to more invisible practices.
It's okay, thank you. I think, is there any other addition? If not, I think we are satisfied so that we can move to the next question. There are many questions coming in. So far, How has implementing the Finance Act 2020 impacted both IGR and key sectors of the nation's economy? So far, how has implementing the Finance Act 2020 impacted both IGR and key sectors of the nation's economy? Any panelist that is ready can pick that.
Okay, thank you. We'll start from the beginning. You know, in Nigeria, the domestic mobilization in Nigeria has been very low. By 2020, our tax to GDP ratio was 6.1%, as against the African average of 17% and the OECD average of 28%. So the tax gap, the revenue gap in Nigeria is very large. So what the Finance Act sought to do is to try to close this revenue gap by opening up the tax base, creating a larger tax base. You know, first by increasing, one of the reasons for this huge revenue gap is the VAT, the low VAT rate. Nigeria, before now and even now, is operating one of the lowest VAT rates, 5%. The Finance Act increased it by 50% to 7.5%. And what the Finance Act also did again was to create a threshold for the VAT. That threshold means that a large section of taxpayers will not be in the VAT net. And so the tax authority can now concentrate on the big taxpayers and maximize their resources in pursuing these big taxpayers. And as a matter of fact, that has led to a significant increase in tax collection, especially VAT. VAT has increased by up to 34% from the implementation of the Finance Act. Another area, that the Finance Act has impacted much is CIT. CIT has also increased to 34% in 2020 now. Increased, have taken over from the oil taxes. Previously, in the 90s or early 2000, no oil taxes will increase, will be up to 70%. Taxes with 30%. As of 2020, no oil taxes was 77%. Why oil tax? Yes, we are implementing our economy and Nigeria. Thank you.
Well, I think it is obvious that, like you said, the reason why the Finance Act was introduced, or the two acts were introduced, is to help to improve the economy and especially taxation. And we all know that Nigeria depends solely or mostly on oil revenue. And this has accounted over the years for more than 80% of the GDP. So the idea was to improve collection of non-oil revenue, especially in the form of taxes and so on, and also to boost the economy. And I think that to a large extent this has been achieved from the statistics which the PRS man has given us here. We've seen some improvements. The idea too was to bring in more people into the tax net by even with the exemptions. The IRS or the Revenue Service have a way of with the exemption, the taxpayers are still expected to file some form of return. And over time, even though the IRS or the Revenue Service have to concentrate on the large taxpayers because of the exemptions, but the returns and monitoring of the taxpayers, more are expected to fall into the range that expected to pay taxes. The whole idea of the Finance Act, apart from the COVID, which was a major issue, I think to a large extent revenue has improved. We can see that from the statistics. And we expect that with the incentives created by the Finance Act, more people will be willing to file returns, more revenue will be earned by the government and the tax authorities and the economy as a whole.
Okay, the presenter now maybe wish to add something.
Just to add that apart from revenue growth that has been experienced as a result of the Finance Act, I also believe that the Finance Act has also made a lot of the tax authority to deploy infrastructure that will enable them leverage on the act, especially because of the digital economy, where somebody can be doing very good business remotely without being physically present. And if they don't deploy technology, you cannot track those kind of businessmen. So with the Finance Act, some of our internal revenue services have been forced to deploy infrastructure to enable them leverage on the provisions of the changes we have in the various taxes.
I think justice has been done to this question. It's okay.
Yes. While the Finance Act has very clearly shown huge promise at the national level, at the state level, there's a lot of battling because the threshold of taxpayers that we usually should be looking at the state level, are the ones that are mostly exempted from the tax net. And so while you have these figures at the national level, things are going up, VAT is going up, other taxes are going up, but when it comes to the state, there is a lot that the revenue authorities have lost. And so what you find is that by reason of this Finance Act, the revenue authorities are now trying to think out of the box, as it were. That's one of the implications, to be able to replace those segments that have been exempted from the tax net and see how they can bring in, eligible ones to be able to meet the targets that, because while these exemptions are in place, the targets that are set for revenue authorities remain not just in place, but moving up.
Thank you very much. You can summarize that the 2020 Finance Act has helped to grow IGR. It has also helped to remove some gaps in the law that creative taxpayers and their consultants were leveraging on to avoid paying the amount of tax. It has also helped to bring in more people into the tax because gaps have been closed. All that have been said here and more. We have the last question here before others start coming in. Can the Cross River State Internal Revenue Service leverage on amendment made to the Stamp Duties Act by the Finance Act 2020 to improve IGR from stamp duty? Hello?
Yes, sir.
Earlier on, for those of us who came early, we heard that the Cross River State Internal Revenue Service is increasingly digitalizing. Yes, I am aware. I'm waiting. When we take this, we will call on him. So we are going to demonstrate the applications that they are launching immediately. later in the day, we will see that here. So I think that is one of the things that is very likely going to help them. The panelists will do more justice to that. You're welcome. The question again, how best can the Cross River State Internal Revenue Service leverage on amendment made to the Stamp Duties Act by the Finance Act 2020 to improve IGRO accruals from stamp duties?
Yes. Can I come in here?
This program is streamed live. Mr. Oludolapo Gomkwang is on. I'm sure you are the one who wants to talk to us now.
No, my name is Uzoma Francis Obani.
Uzoma Francis Obani. It's okay. After that, Olu will speak with us. Go ahead, Uzoma.
Okay, good. Stamp duties revenue is expansive in nature and covers virtually all aspects of human endeavor. It involves both adults and children, students and teachers, employers and employees, as well as organizations. Now, strategies to leverage on stamp duties revenue potentials by Cross River State IRS. I said that Cross River State IRS should define stamp duties in sectors as follows: banking sector, communication sector, MDA sector, judiciary sector, education sector, health sector, hospitality sector, trade and commerce sector, manufacturing sector, extractive industries sector, organized private sector, informal sector, entertainment sector, professional sector, oil and gas sector. Now, second strategy for them is to establish, they need to establish offices of stamp duties with desk officers in all the local government areas of the state. They also need to appoint more commissioners of stamp duties for Calabar, Geb, Ekom, Goja, and Obudu, with desk officers as well. I will expatiate on all this. Other strategies include a holistic and comprehensive implementation of Stamp Duties Act in Cross River State, taking into cognizance of the amendments made to Stamp Duties Act by the Finance Act of 2019 and that of 2020, respectively. Now, there is need for effective monitoring of performance and weekly reports and evaluation of strategies on a weekly basis. Then there is need for sensitization and public enlightenment through town hall meetings, stakeholders forums, jingles, billboards, handbills, advertisements, both radio and television. There is need for full automation of stamp duties processes for effective monitoring and enforcement. Now, should the above strategies be professionally implemented, the stamp duties revenue accruing to Cross River State would witness a great leap from what it is currently to an all-time high never witnessed before. Full details of the implementation strategy will be made available to the Cross River State IRS during the implementation stage. Now, the 2020 Finance Act came up with a new Section 89A. And that Section 89A now made it that states will have 85% of the revenues accruable. while the federal government and the FCT will have 15%. It is important to note here at this stage that Cross River States do not have to wait on FRS to collect under Section 4.1. I would advise that FRS, the areas they are not covering, I will advise that the state IRS should move in, collect the stamp duties that is due, and then remit the 15% to federal government and the FCT, instead of losing that areas that FRS is not currently covering. And they are numerous in Cross River State. Since Section 89A have already made provision that states can keep 85%, and then 15% goes to federal government and FCT for now. I know that FRS has not actually been covering the areas, some areas of stamp duties. That's my number one advice. The number two advice, like I have said here, once the stamp duty processes are fully automated, there will be a great leap. Now, remember before the 2019 Finance Act Amendment of Stamp Duties, it was the state government shall collect. But under Finance Act, Section 53B, is now, they narrowed it specifically for the state, the relevant state tax authority in a state shall now collect. So making it easy for either FRS to collect under Section 4.1 or state IRS to collect under Section 4.2. The import of this is that you do not need to now start going to the relevant state civil service commission to appoint commissioners of stamp duties. Now it is squarely on you, the chairman of the IRS, to now appoint relevant commissioners of stamp duties. The earlier process was because it was said state governments shall collect under Section 4.2. Now that they have narrowed it straight to IRS, IRS should fully be in charge of stamp duties in the state and then be able to dictate how to run the stamp duties in that state. I believe that once the IRS recognize their power, the powers given to them by Finance Act 2019, with under Section 53B, they will be able to leverage effectively and cash in on the huge revenue potentials of stamp duties in Cross River State. Thank you very much, and God bless you all.
Incidentally, Chief Ubani Esquire, the Managing Consultant, Chief Executive Officer, Macro Technical Value Added Services, is one of the panelists who indicated that he will be with us via Zoom. That is why we are listening to him. So, Chief Ubani, thank you very much. Can we give him another round of applause? We would like to request you to submit your
I've lost the audio, if you can hear me. Hello? Hello?
Power failure here. Okay, we are just coming back.
Oh, okay.
Are you with us?
Yes, I'm here.
So we were making an appeal that you submit your position in writing to the Executive Chairman, Cross River State Internal Revenue Service.
Okay, no problem at all. I will do that.
God bless you. We are still on. You know, you are a member of this panelist, so just be on. More questions are coming. We'll give you opportunity to answer. It's okay. I think justice has been done to that last question in the program. We now can start attending to others. There is a Oludo Lapo Gonkwam who wants to speak with us on Zoom. Maybe his own is a question or an addition. Are you still on, Olu?
Yes, I am on. I am.
Okay, the floor is yours.
Okay, good morning, all protocols observed. Thank you for this opportunity. Okay, I just want to draw a comment really from the paper presentation based on the amendments that was recognized in the Finance Act in terms of means of submitting letters of objections, that this can now be done via emails and all others. In terms of challenges so far, I like to mention the fact that some of the internal revenue authorities have not brazened themselves up to accommodate this means of submissions. Why did I say so? For instance, I sent an objection letter via the email that has been provided. And some months down the line, I get a query per se with a strongly worded letter saying, I have refused, I have neglected. These are strong words, which I believe that the authorities ought to have checked very well, even before sending such a strong worded letter that I did not submit an objection within the statutory time limit. Therefore, the demand notice, the assessment is conclusive and final. And then I have to go and pull out the email that I have sent. One of the issues that has cropped up in this arena is administration per se, in terms of technology on the side of the IRS. When a taxpayer sends its objection through this electronic means, there isn't any form of acknowledgement except for one or two tax internal revenue authorities that you get a default acknowledgement that you can present at any time. But for most of the others, there is nothing like an acknowledgement from their hand. Also, we have some of the IRS that ordinarily have some platforms via which you can make these submissions, while others, it is just a general email. So in terms of administration, then goes to show that there isn't anyone mandated, someone manning such emails to sift through the mails, to sift through and be able to, demarcate in terms of all the letters or whatever emails that has been received. Oh, this is an objection, this is that, and send it to the right quarters. So in summary, what I'm saying in essence is that the tax authorities need to do more in terms of deployment of technology so as to brazen up to the provisions that, that has been made available by the Finance Act. Thank you very much. Sorry, I didn't introduce myself. My name is Oludolapo Ogunkomi. I am a partner with Ascension Consulting Services, and I'm also at this medium representing Dangote. Thank you very much.
Thank you. We will now continue to attend to other questions that have been raised by participants here. There is a question here on, for the purpose of computation and returns, when exactly does the Finance Act 2020 take effect? I know that law is not retrospective. It cannot start earlier than when it came into force in February 1st, 2020. I think that's his answer. If you are a taxpayer and after some years, your business did not move again, what will you do when tax officer come around to ask you to pay your tax and there is nothing in the shop again, or you are still managing little item in the shop, are we to like the person? Well, tax is paid on income. So if you are generating little income that is above the threshold, the minimum income threshold where you can pay tax, you will still be required to pay tax. For instance, if your income is above 30,000, which is the minimum wage. Okay.
I think if the person is here, tax is law. Tax is based on income. You're not to be taxed on what does not exist. So what you need to do is to keep your records, whether it's one item or no item on the shelf. Keep your records, and the tax authority comes and you show the records, and it's transparent, and nobody taxes you. I think the era has passed, and I want to commend the chairman of IRS here, Cross River State, not because it's here. The era has passed where the tax authority bullies taxpayers. We have passed that stage. Now it is engagement one-on-one. Where's your income? I have, I don't have, and it's done. So keep your records properly, and you're okay. You're okay.
It's okay. Another question. An appeal. FIROS panelist. Please confirm to us the taxpayers CIT plus EDT that with the Finance Act 2020, small companies with turnover of 25 million and below are not asked by your office to pay any CIT or EDT. Confirm your current practice in your office. That's directed to you.
The panelists, distinguished ladies and gentlemen, you see, the exemption is not supposed to be proactive, retroactive. If the exemption is 2020, and since 2001, you have not even filed returns, you cannot come and then you claim that you are exempted from tax. So if the revenue service is asking you to pay tax because your turnover is below 25 million, it's not the period covered by the Act. It's the period before this time. And some of you forget that law has a way of catching out those who don't, respect it. It's like someone was asking about credit notes yesterday for those who have below 25 million. Credit note will also leak you out, because when we total the credit notes and gross them up, it can also show that you are operating above 25 million. So to go to straight, if FRS office is asking you to pay tax of 25 million, it's not the one covered by this Act. It's the period before the Act. So you must exhaust those ones, then the period covered by the Act, you will not pay. That is the summary of it. Thank you.
In addition, there is a proviso. There's a proviso for that tax exemption. They say that provided that the company continue to file return on time. So you have to file that return to show that this is your turnover, and that turnover must be verifiable. You see, so if you don't file return, it means that you have not, I'm talking about CIT. If you don't file return, it means you have not complied with the law. And so FIRS can still be on your neck, and you will think they are not doing what they're supposed to do. So the fact that your turnover is less than 25 million does not mean that you will not file returns. In fact, it is now that you must file the returns for us to be sure that your turnover is 25 million or less. Thank you very much.
Also, note that turnover being 25 million and below is not static. This year, you may be below 25 million. Next year, maybe business is good. You can be above 25 million. So it doesn't mean that if you are just 25 or less million, you will remain there forever. So take note of that.
It's okay. The next question is my understanding about the exemption of those earning the minimum wage and below is that those earning 360,000 naira per annum and below, 360,000 naira and below per annum are exempted from pay. Correct. That is the position of the law. The next paper here, somebody wrote commerce, agri, finance. If you like, add church, religious activities. One, if you are engaged in activities in commerce, in agri, in finance, and your church has a business that generates income, that income generated from that business, tax is liable. Hello? So whether you are in commerce, in agri, or finance, or in any sphere of human endeavor, once you generate income that is above the category that is exempted, whether as an individual, which is 360,000 per annum, or as a company, which is 25 million or below, once it is above 25 million, you are liable to tax. If you like art fishery, poultry, anything you are doing that is a business. That's why I went straight to the church, religious activity. Some churches have businesses, they generate income, and they will tell you because the law says religion. No, that is not the intention of the law. The intention of the law is that for income you generate through your what do they call it? Offerings and tithes, that one is not taxable. But if you have a business, you have a school, you have a bookshop, you have a rice mill, any other form of business that the church engages in, the income earned from that business is taxable. Thank you, and God bless you.
And also to add that while the income of the church is tax exempt, the income of the workers of the church is not tax exempt. If you are paid by the church on a monthly basis, that income is subject to tax. While the income of the church is not. For you as an employee, you need to pay that payee. Yes.
So
pastor and church workers.
Those pastors that are here, if you as a pastor, you are earning a salary from the church worker is earning a salary that is above 360,000 naira per annum, that your income is taxable after the relevant allowances have been discounted or deducted. There is a question here. Failure to remit tax or file returns as at when due, it affects, what is it? It's okay, it attracts penalties. May we know the percentage? Failure to remit tax or file returns as at when due, it attracts penalties. May we know the percentage? There are two areas. Is it for personal income tax, deducted by employees and not remitted? Or is it on a company's income tax? Well, for each of them, the law specifies how much you will pay, and the position of the law is very clear on that. So when you meet your consultant, your consultant will advise you properly.
Can I answer it, please?
Okay, go ahead. Ubani.
Okay. Now, the penalty is just 10%, while the interest is that of the prevailing commercial bank rate, because it is assumed that the money you fail to remit, that you have used it. Maybe you put it in a savings account. So the interest accruable is calculated on the commercial interest rate payable, while penalty is just 10%. I hope that is clear. Hello?
Isubani is taken. The question has two poles. One aspect is remittance, and the other one is failure to file.
Okay. Failure to file, if it is for individual, is 50,000 naira. While if it is for company, it's 500,000.
Then failure to deduct or remit tax is 10% of the tax not deducted or remitted, plus interest at CBN monetary policy rate.
Right.
That is, if you fail to, let's say you are an employer, you are supposed to deduct pay from your employers and remit, and you fail to deduct. So what you pay is 10% of the total amount that you fail to deduct, and then interest at CBN monetary rate. It does not mean that when you pay the penalty, you will not pay the principal. You still pay that money that you did not deduct. You still pay that one.
So you will pay the principal amount of tax. You will pay penalty. You will pay interest on the prevailing bank rate. So three things. That is why we brought you here together, to know all this, so that you will voluntarily comply. Pay only the principal amount of interest, avoid the penalties, avoid the interest. And we hope you will go home with this and learn to do that. Permit me to, on your behalf, thank the presenter and the panelists, including, of course, Chief Ubani Esquire, who is with us by Zoom. I think they have done very well, and it will not be out of place for you to give them a resounding round of applause. Thank you, and God bless you.
Thank you.
And we want to get the hands together for the panelists and the moderator. Thank you. Thank you very much. While the panel session was going on, we had some of our guests step in. In a very special way, I'd like to acknowledge the presence of the Permanent Secretary, Ministry of Finance, Cross River State, Mr. Gabriel Ikan. Welcome, sir. I also like to acknowledge the presence of Mr. Francis Obri, Managing Partner, Patrick Francis & Co. I really want to sincerely apologize for having this recognition now. It should have come earlier than now. Please, sincere apologies, sir. Thank you. Thank you very much. May I also acknowledge the presence of Mr. Kunle Oladokun, Managing Director, Malaki Microfinance Bank, Calabar. Are you here, sir? You're welcome. Thank you. Also acknowledging the presence of Dr. Sylvester Epaye, MD, Bako Medical Center. You're welcome, sir. May I also acknowledge the presence of the National Association of Proprietors of Private Schools, a very special way, the Cross River State President and ESCO members. Let's put our hands together for them. Thank you. Please check around you if you have misplaced your bunch of keys. Please approach me for identification and collection. A bunch of keys. If you may have misplaced yours, please approach me. Thank you. I want to believe tea break. It's time for tea break. Thank you. So now, Mr. Henry, can you please assist us in ushering the Vice President and other very important guests, first of all, to they stand behind. Please, let's be orderly. Let's be orderly. I want to believe we have enough to go around. So just wait until you're called upon to the 7th point, please. Thank you very much.
Kalu is locking the shop again. I think those tax people are here and he is running away from them as usual. The last time I confronted him, he confided in me. He said he had paid to some men wearing red t-shirts. According to him, it was cheaper and they gave him a fake manual receipt. As for me, Naimeka, man, there is no need to run. I pay my tax right here from the comfort of my shop. You don't mean it.
Make we pay our tax. Yes, so be like a maker. Pay your taxes at any commercial bank close to you. Crutech, Econdo, and Unical Microfinance banks, or via POS at IRS offices. You can also pay your online via quickteller.com/crossriver MSA. Collect your e-tickets immediately and obtain your receipts at CRIRS office. Don't pay money to anybody. Pay your tax with ease. For more information, call 0802-567-0608 or 0806-627-6829. CRIRS. It all starts with your tax.
This message is brought to you by Cross River Internal Revenue Service.
Can I have your attention, please? There is a feedback form that is going to be shared now. We expect all of us to please fill the forms and return to the desk behind. There is a feedback form that will be going around now. Please receive one of them from any member of any of the core members, and then fill, return it at the desk behind. Thank you.
it'll be just fine. We'll make it last 'cause we know these days.
is locking the shop again. I think those tax people are here and he is running away from them as usual. The last time I confronted him, he confided in me. He said he had paid to some men wearing red t-shirts. According to him, it was cheaper and they gave him a fake manual receipt. As for me, Naimeka, man, there is no need to run. I pay my tax right here from the comfort of my shop. You don't mean it.
Make we pay our tax. Yes, so be like a maker. Pay your taxes at any commercial bank close to you. Crutech, a teller.com/CrossRiver MSA. Collect your e-tickets immediately and obtain your receipts at CRIRS office. Don't pay money to anybody. Pay your tax with ease. For more information, call 0802-567-0608 or 0806-627-6829. CRIRS. It all starts with your tax.
This message is brought to you by Cross River Internal Revenue Service.
So 90% of us have had tea. And so in the next 5 minutes, we expect that we all be settled so that we can continue with the remaining part of the session. We'll be kickstarting the next part in the next 5 minutes. So please, let's try to tidy up.
Bring that man here. Hurry up, people should stop wasting my time.
Madam,
Please, put him into the vehicle. Let's get here. Get inside. Get inside. And you, what are you doing there? Get down. I don't have time to wait. Bring here. Can I have your taxi?
That's fine.
Yes.
Where have we started paying?
Hurry up, people should stop wasting my time.
Madam,
Get inside! Get inside! And you, what are you doing there? Get down. I don't have time to wait. Bring here. Can I have your taxes?
That's fine.
Yes.
Where have we started paying tax here?
Okay, that's a long talk. Get inside. Here. Hurry up, people should stop wasting my time.
Madam,
please put him into the vehicle. Get inside. Get inside. And you, what are you doing there? Get down. I don't have time to wait. Bring here. Can I have your taxes?
That's fine.
Yes.
Where have we started paying tax here?
Okay, that's a long talk. Get inside. Put him inside. Get inside. Bring that man here. Hurry up, people should stop wasting my time.
Madam,
please put him into the vehicle. Get inside. Get inside. And you, what are you doing there?
while we wait for our presenter to get himself set, if you are finished with your forms, please kindly return them. Can we have the core members move round to receive the forms from participants? Core members, you may please assist us in receiving or collecting the forms from participants. Thank you. Sincere apologies for the delay. I want to announce that we are ready for the next presentation. This is the presentation of the Crossover Internal Revenue State Tax Management System. This will be presented by Mr. Sylvester Mako, CEO, APMAT Limited. Can we please put our hands together for him?
Good afternoon, everybody. I want to say thank you to my chairman, the board chairman, and all the guests here. I'm here to present exactly what we are doing for the revenue service, the deployment of the tax management system. And revenue service really, you can't run the IGR without a platform. So we are going to present the different strategies and different deployment the board has done to enhance the revenue collection for the state, and also make it a lot easier for taxpayers to pay their tax. I want to show a short video of what happens if you run IGR with technology, and if you resort to the old system of running IGR. The video I'm going to show you is what happens in such states where IGR is done on a manual process. Okay, so it's just a very short video, it's less than 1 minute. So, but I want you guys to look at it and identify the salient points that the video is telling us. And this is what happens if you bottle yourself in the old ways of pursuing IGR. I'm sure some of us must have heard about the story of Pericoma at Topiweka, when an Anambra IGR was done manually. So can we shoot the video, please?
Bring that man here. Hurry up, people should stop wasting my time. Madam, please put him into the vehicle. Get inside. Get inside. And you, what are you doing there? Get down. Bring that man here. Hurry up, people should stop wasting my time. Bring that man here. Hurry up, people should stop wasting my time. Please put him into the vehicle. Get inside. Get inside. And you, what are you doing there? Get down. I don't have time. Can I have your taxi?
That's fine. Yes. Where have we started paying tax here?
Okay, that's a long time. Get inside. Put him inside. Get inside.
So you can see exactly how that one was bundled inside the bus. I can show you that if you want to beat a lot of people, you cannot bundle them into that bus like that. So what we are trying to explain is that you cannot run IGR in this format, all right? So what the board has done is to deploy a whole lot of technology to solve a whole lot of problems. And the first thing in tax management is identifying who a taxpayer is. If you do not know who a taxpayer is, you cannot effectively tax the person. Now, even in the federal system, they implemented the thing Okay, so also in Cross River State, you have the TIN project. Now, a lot of states today do TIN, but again, you have the JTP TIN. I want to mention it that it is synchronized with what Cross River is doing. It's not in isolation. Okay, it's still one number, but the process is done from the revenue service, that's from the state. But the thing is also a national thing, all right? Okay, so what the Cross River State have also done to ensure effectiveness is to introduce processes that will make it easier for taxpayer to obtain this TIN number. Now, also implementing the biometric aspect of it. Because if a taxpayer has a TIN, two different things in the state, you have lost that structure of making sure that you know the taxpayer, which means you can use one thing for pay for one services, another thing for another services. And you will also agree with me that the essence of uniqueness in the tax is to ensure that all transactions we do in the state is monitored by the board. So the board don't need to ask you who you are. If you use one single thing for all your businesses in the state, automatically the state knows who you are because they're seeing all transactions that you're doing. So when you get to the board and say, I'm an artisan, the board man logs into the TMS, he sees every transaction you have done with the state. If you have bought land, you know. You have registered 30 vehicles, you know. So you are not going to lie to him. And the board implemented this and also introduced biometrics to it. Now, the uniqueness again for this very project is that the state has done it in such a way that even when you are not in Cross River, you can still obtain this thing and it'll still be unique to you by introducing the artificial intelligence, that's the facial biometrics. So even if you are in America today and you want to obtain a thing, make your payments and still get your receipt while you are in America, you will still do it with this platform. Now, I also want to show you how the platform looks. So today, if you look at this dashboard, you have 295,000 registered taxpayers, 202 individuals, and 91,000 companies registered in Cross River State. So the data you're seeing here is unique, it's cleaned, and purified. Now, because, of course, there's no war going on today in Cross River State, only one person has registered. You can see the person's data icon, who is the only person that has registered today. Perhaps maybe this is a registration through the self-service. In this registration, a lot of information has gathered, like information that are required for us to do order assessment and the evaluation of this taxpayer. Okay. Because today we just have basically only one person registered, I want to go back to maybe a period where we have enough registration so that you can see how the data comes. Okay, so this is the data that is being pulled in the system Now, this data comes from different locations in the state, from the board, from the ministries, and designated locations in the state. So because the revenue service has tied this thing to every payment in the state. So if you want to interact with the state, you must get one. So you can see the data and okay, so okay, so like I said, the first thing in tax management system is to know that anybody that is coming into that system is unique to it. And because it's unique to it, it can actually identify you and know all your transactions in the state. So the next slide, when you are known by the state, that's if you have done registration. Okay. Now, for instance, a lot of people say, how do you tax the informal sector? Somebody that is an artisan, somebody that is not employed. Okay. So the TMS work is to ensure that it organizes the informal sector in a unique way, all right, through enumeration that I've just mentioned to you. For instance, if somebody is just that he wants to go and do vehicle registration, okay, he goes to the TMS, generates his thing, and does his vehicle registration, for instance. Meanwhile, this person has not paid his income tax for the year. So instantly, the TMS receives that information and checks whether this guy has paid his income tax. If he has not paid his income tax, he's supposed to alert the revenue board that Mr. Epan has registered 20 vehicles in his name. Meanwhile, he has not paid his income tax. So the board can easily serve him a notice instantly. The same way, in some states, payments of different revenues are tied to certain other revenues. For instance, if you want to pay for land transaction in some states, the first thing the TMS will do is to check whether this guy has paid for income tax for the state. If you have not paid, it will not stop you to do your land transaction, but it will intelligently allow you to process all your transactions. By the time you pay that money in the bank for your tax, for your land transaction, it will automatically move it to your minimum income tax for the year. So if your minimum income tax for the year is like 50 or 100,000, you deduct it first and keep it. Then the land people will tell you, okay, your money is not enough for us to process your land document. You ask that, what's the problem? Say, Board of Internal Revenue has collected 100,000. So in that instance, you either go back to the bank to complete, but remember that's minimum, but at least the board has collected something. And this is how it ties to so many other transactions in the state. So, and this is possible because it is fully automated. So all transactions are linked together, all right? So they know who you are, so you can't lie. So for Board of Internal Revenue too, for people that normally will want to just pay their tax, they don't want problem, okay? There's also a portal, a self-service portal, where you can go to the portal, where you can go there as a staff, all right? Remember, you already have an account with the TMS, that's the board. So with that account, you will file your annual returns, generate your assessments, and you can even make payment of whatever you generated from the system. Depending on the way the board works, they can decide, because it's your first time and you are doing it voluntarily, if you achieve the minimum tax payments, the system will allow you to process it to the end and issue you electronically your tax clearance certificate. In some states, they will want some level of control where even if you have done it on your own, the board will also check certain things before they approve your TCC. But in some states, they allow the TMS to run the whole process. How does the TMS run the whole process? I mentioned about somebody that has bought land, somebody has registered taxi vehicle, somebody has paid for a waste management bill, has paid property tax for a building. Now, what the TMS does is that as you make all these payments around the whole state, it's adding net worth to you as a person. So if you have paid for a property tax of what 50,000, it checks the value of the property, adds it to your net worth. Or 5 jeeps, adds it to your net worth. You pay for land 20 million, adds it to your net worth. So when you are doing that, your personal income assessment on yourself, those net worth, it calculates it for you and give you your minimum. In some states, like where this system has been deployed, they always allow it because it's a voluntary thing. They will encourage people to pay. So they will allow you to just pass through that process, allow the TMS to run that calculation, generate your assessment for you, and you can electronically make the payment right there in your house, and you receive your TCC instantly in your email. Remember, you have done registration before. In that registration, they will get your phone number, your email, your address, and everything about you. Okay? So from this personal account, this is somebody that has a team already and has an account with the board. From this personal account, you can do assessment, e-tax filing, check payment history, do all sort of things, including even if you have lost your TCC, you can also regenerate it from here. Okay, so the companies are not also left out. All right, the companies for the payment of PAYE, the companies are not left out. They also have their own account. Just like we open account for individuals, generating for them, companies also open accounts, right? Now, what the company do is that when those accounts are created for the company, individuals in those companies are supposed to also get their own individual thing, all right? Either in some cases, the boss staff goes to that company and enumerate all of them, or they themselves on their own can generate those TIN numbers. Now, when they do it, the staff, the company will align them to their own account as their own staff, all right? So from there, they generate their monthly PAYE and also remit same to the board. I want to narrate a short story of what happened in, I think it was in Anambra State, when this system was deployed. In the first month it was deployed, because in the tax management system, there's a process of control that is there. So when the companies get their staffs register under them, okay, they generate their PAYE mandates and they make payments in the bank. Now, the difference before, where the company just send a schedule to the board issue them manual receipts, all right? Now, with the TMS now, it is automatic. The company has generated the mandate. It shows them the figure they are supposed to pay according to their staffs and their figures, and they make the payment. Now, the difference here is that as soon as that payment goes into the system and the system recognizes that this company has paid for this month, the system will automatically send notification to all the employees that their company has remitted the PAYE for that month for them. Okay, so this is my short story. What happened? In that very first month, a company, I won't mention the name, but it's a bank in Nigeria, one of the banks, one of the top banks, generated a mandate, committed the schedule, made payments, and when TMS receives the payment, it populates the information to all the staffs. Because the information to the staff is telling them that company A has paid this amount on their behalf. So the staff now started saying, but come, this is not what was deducted on my pay slip based on my PAYE deduction. So they went back to the bank and it was like, because there's visibility now, you know what is deducted on your salary or monthly. Now the board is saying this is what is paid on your behalf and you are seeing some disparity. So some of them went back to the bank and said, look, it's not correct. In fact, they came to the board first to complain that the electronic receipt that was issued to them was wrong in the first place. So the board said, no, that is what your company paid. So they went back to the company and said, but this is not what was deducted from our salary. So the next month, the bank reverted and paid what actually they deducted. And I'm talking about figure running into millions when you talk about the difference. Now, nobody has gone to this bank to ask them to pay the right thing. But the TMS has intelligently enforced them to do the right thing, because imagine where your staff thinks that you are duping them. So this is the value of technology, and this is what the TMS does. It intelligently deals with a whole lot of stuff without you knowing. So TC aspect, again, today, a lot of people will say, I want to go to board, I want to get my TCC and all that. If you're running a TMS, like what is happening in Cross River, at the end of the year, the system is supposed to know that you have been paying every month. So it runs this generation for TCC and forward it to you. Okay, so you don't need to go to anywhere. All right. Okay, so let's now. Again, like if you notice, I'm talking more of the board transactions. TMS goes beyond that. All right. The collaboration between the board. Again, if you look at the basis of why the British people introduced payments of other revenues, which a lot of us don't really know today why. People were really asking, why do you have other revenues? If you go back and read the history of taxation and why, it was not basically because to increase the volume of money. Why they introduced something like waste management, other revenues. It was not to increase the money. This is the mistake a lot of us make. It was basically for them to know who you are so that they can tax you. If they know that all the MDAs in Cross River are running on this system, I don't need to ask you who you are. As long as you live in this state and you do business in this state, even if you're an artisan, I will know who you are. Even if you are a trader, I will know who you are because you interact with the state. But concentrating on the board transactions, we also talk about how the TMS will also help you if you bring in every MDA into the system. Now, for withholding tax, I'm sorry to say this, but I keep wondering why so many people don't come back with credit notes to redeem or reduce their liability every year. If I may ask, okay, maybe it's not the answer and question section, but the truth is that visibility is the problem. Today, the banks are withholding interest on bank deposits. How many of us have gotten a credit note on our fixed deposit in the bank that are deducting your withholding tax every month, or even your savings account? They deduct something from your savings every month based on the interest they pay you, and they remit it to the state. You are supposed to get a credit note for those transactions so that you use it to reduce your liability or your income tax for the year. So, but nobody is asking about that. Not because people are not asking, but where do they even go to ask for those information? So what we have done with automation of withholding tax is to create the visibility so that the taxpayer can actually log into the system and knows that certain transactions he has done, he is also eligible for a credit note and use it to go to board and redeem those credit notes and reduce his annual tax income, annual tax, all right? So that's the tax portal that Otto was deployed in Cross River. We can look at it a bit. Okay. It works. There are 3 different categories of people that have access to that system. All right. You have the agents. Agents could be banks. It could be companies that deduct this withholding tax from taxpayers. It could also be even individuals that make payments, or maybe a landlord that is collecting rent from somebody and is doing withholding tax on it. So the system allows you to, again, from the board staff too, they can use the system to process those payments. So if you go to this portal with your ID, you'll be able to know whether you have credit notes in Cross River State where you can use to reduce your annual tax. Okay, so we have made it visible for you so that you begin to utilize that. Today, nobody is doing that. I can tell you people that have like 20 million, 50 million fixed deposit in the banks, if they were able to get their tax credit, maybe would have reduced their tax, annual tax by maybe 50%. Okay. So we have created a platform for it, and maybe for want of time, we might not go into the entire details on how it's processed. Maybe on another arrangement, we can, so that people will understand how it is done and how they can utilize the benefits of the platform. Now, okay, still talking about withholding tax, can go further down. Now, ETCC and electronic receipts, I've mentioned it. Again, I want to tell you guys another short story. Sorry, I'm a storyteller, but it helps me to elaborate some of these things. The ETCC is, I've mentioned how easy it is for us to obtain without any interference. Even when you get to the board and do your normal processes, you can instantly get this ETCC. Somebody went to Abuja for embassy. Actually, it was not him that was traveling. It was the wife that was traveling. So the interview, the wife also mentioned that it's the husband that was paying for the travel expenses. So the visa officer said, okay, let's have the tax clearance of your husband so that let's even know this man's value, all right? So the guy called me. He lives in Lagos, Okay. So he tried to do it in Lagos. He could not do it. So he called me, but he's from Anambra too. So he called me and he knows we are the one that deployed those platforms. So he called me and said, look, I'm currently in US. My wife, this is the problem. How can we help? He has called Lagos, but they said he has to come because he has not been paying. That's the truth. I said, okay. How much are you willing to pay, at least for a start? He said, because the wife has said that, and from what he said, he needs to be a big man to be able to support his wife's travel. So I said, if you have to be a big man, you have to pay up to 500,000. So I gave him 3 options. I said, you can pay through Calabar, where we are. We can pay Imo, Abia, all these places, through Cross River and Anambra. So he said, no, but I'm from Anambra, let me work with Anambra. I said, okay. So register yourself, obtain the thing, run the processes, just like I've explained it, and the TCC will be issued to you. He said, is it possible in Nigeria? I said, yes, right. Under 10 minutes, he was able to complete it, make payment through QuickTeller, and instantly he got his TCC and forwarded it to the wife. So the wife was asked to come back the next morning, and that he was able to achieve. So that's how difficult and simple obtaining TCC can be, and frustrating if you don't provide the processes. And that's what TMS will do for you. Electronic receipts. In IGR, nobody dashes you a car when you pay IGR, nobody. The only thing you gain or you walk away with is what? Is your receipt. So receipt is as important as Board of Internal Revenue itself. If you don't guide your receipt as a board man, then you have not understood how to grow your IGR. So TMS major strategy is to ensure that if money does not hit the bank, you will never get the receipt. So it's end-to-end payment process. Until TMS sees that money in the bank, you are not going to get your receipt. Now, TMS even went further because he understands the value of receipt. Today, major problem of revenue services is, how do I ensure that everybody that has my receipt, that receipt is authentic? It's one of the major problems. What about the biggest problem of Board of Internal Revenue, not just in Cross River, across the whole Nigeria, including FIRS. Now, what has TMS done to prevent this? What the system has done is to hand over enforcement of receipt to the taxpayers. And how did they do it? By implementing what we call revenue reward system. It has not been implemented in Cross River. We're still working with the board chairman to implement it. What does it do? Your receipt becomes your lottery ticket. So if you give anybody a receipt in Anambra today, the first thing they will check is this receipt authentic? He will dial the receipt code, a short code, to confirm that this receipt you are giving me is authentic. And do you know why? Because if it's not authentic, he is not qualified for the monthly lottery where he can win television, different things, even money. Okay? So the taxpayers now are the ones enforcing the real receipt in the system. So if you issue them manual receipt, say, okay, no, this one, I no follow. Give me my electronic receipt. And even when you give it, you will check. So at the end of the month, the TMS runs that calculation, generates a whole lot. Based on the algorithm you place, you can say different categories of people you want to capture for this month. It will run it, generate that reward system, and it will be publicized. Everybody will know. So you have taken over telling people this is fake receipt. The people themselves are the ones that will fight and fight anybody that is giving them manual or fake receipts. Because for me, IGR is receipt. If you don't terminate receipt properly, you can never grow your IGR. Okay? These are just pictorial explanations. I've mentioned about it. TMS sits in the middle and coordinates everything that is happening, from biometric registration, issuance of unique identity, automation of invoices and receipts, self-service portal. It does everything. Data management, reports, reconciliation, and rest of them. In terms of data management, for instance, you can decide this month to spool out every medical doctor in Cross River that have registered on your platform. Mind you, nobody come for that thing because he likes Cross River State. He's coming there because he has a service he wants to obtain. And he's not going to lie about his address. He's not also going to lie about his data, what he does, and all that. Like I mentioned, immediately you say you are a doctor in that registration, TMS already attaches a figure for doctors. So it knows how much you should pay, right? So you can decide to say, this month, let me spool all medical doctors that have not paid their income tax and start pursuing them. So you have enough analytic data from the TMS to run this and help you to manage your IGR. We also talk about audit, all right? The board audit. Today, you employ consultants to come and run audits on companies, right? The minute they finish that audit, they will agree, okay, fine, no problem. Okay, it's 200 million, let's pay 50. This one, that's not audit. He pays 50 million. Next month, he goes back to what he was paying before. Now, if you pass through that audit through the TMS, and whatever you agree that this man will pay, you put it in the system keeps reminding both the taxpayer and the board. If this man pays less, it will tell the man, okay, you have paid less, so again, no. The board, this man that you people agreed this is what he will pay, he has gone back to what he was. So it keeps informing you guys. So it's not just to pursue. The system also helps you to do audit. Again, including agents. If the board is giving agents revenue to agents, you bring them into the TMS, all right? So that you can make sure that whatever demand notices that are given out is coming from the system. You actually gauge what they are doing with the board. Okay, so this again also explains again the former pictures and all that. Just go down. Okay, now a typical TMS must be scalable, flexible, customizable to serve peculiar state needs. The TMS that is deployed for Cross River is specifically deployed for Cross River. There are so many other things that might not be here, it might be in the other state. So we make sure that we customize this thing to suit the environment, but not taking away the basics of the system, all right? Okay, so you must have an integrated view of all the taxpayers across multiple taxes, all platforms. Again, the system is not built to be like, it's developed in such a way that even when the board says they have some other vendors that they want to, there are some other vendors that specifically handles some collections in Nigeria, like something like AutoReg, some guys are doing hospital management collection. Now, the TMS role really is not to ask you to leave those platforms and bring them to know. But what he's saying is that even if you are going to deploy those platforms, they have to have a handshake, integrate them with the system so that this man will be able to monitor all those platforms. And mind you, the TMS needs the data coming from different platforms to ensure that tax is properly assessed. All right? Seamless integration to third-party applications. On third-party applications like payment windows like InterSwitch, PayDirect, and the rest of them, of course, TMS cannot work without InterSwitch, PayDirect, or other collection platform. All right, because it's not a bank, you can't do what InterSwitch is doing. So it allows InterSwitch to collect the money, but fully integrated to it. You validate ID on InterSwitch side before the payment comes in here. Okay, so like I mentioned, there are so many modules applicable to TMS, and they are all listed here, a whole lot. Okay, so benefits of TMS, in my explanations, I'm sure I've mentioned a whole lot about it. Okay, so thank you very much. If you have any questions.
Can we please put our hands together for him? I'm sure we can entertain one or two questions. Okay, thank you.
Thank you very much. That's a very interesting system, very comprehensive. Yes, I just want to make one observation. You did mention that you are doing a registration, and that you also have a self-registration portal. So I am wondering how someone will register himself and provide the biometrics. I don't know that you have provided for that. I just want to remind you that if you have not provided, maybe you should do something. And I also want to maybe mention to you, maybe it's something that you know before, but in FIRS, we have a system that we are using, the tax pro. What it does is that it is linked to another database in Nigeria. Like for companies, if you want to register, you must use your company's registration number, and then it will not pull your data from the CAC. It is linked to CAC. If for an individual, they are using BVN. So for BVN is now compulsory for almost all taxpayers, because most taxpayers have accounts. So before you have an account, you have a BVN. So once you have a BVN, so this system, you use your BVN to register. It's the first thing that you input there. So it now pulls your data from BVN. So BVN is already a biometric data. So if you know, you can explore those options if you have not thought of them before. Thank you very much.
We may not be able to take so much. Let me just give an opportunity. Say hands up.
Yeah, thank you very much for the functions of TMS just presented to us. It's been a robust database that the states have ever dreamed of, whereby the database across MDAs can be integrated, and that could provide a very robust place for the IRS to know their taxpayers. However, I'd like to suggest that the revenue are paid by revenue heads, and YTMS can serve as a good tax monitoring to ensure that revenue are collected. It brings complication to the ease of doing business when you begin to sub-allocate money that come from one revenue heads to another. And also, it brings issue of complication for corporate taxpayers to be able to process approval for their payment. I give you an instance. Somebody just made payment for PAYE, and you have allocated the money to settle waste management bill. And as a result, you couldn't issue receipt for that taxpayer. It becomes an issue for him to process your next payment. And that delays the idea of you generating revenue the way it should be. So for me, I suggest that if TMS can recognize that, flag the person down for whatever shortage or revenue, other assessment that I need to pay, and the relevant Department of Internal Revenue goes after the person based on that. I also like to mention that with the unique identification number of the taxpayer, like Federal Inland Revenue is trying to do now for medium scale businesses, Internal Revenue too could go ahead to see approval for a linkage between the tax identification number as the bank are now mandated by the new Financial Act to link it to the back end of the customer's BVN. Because knowing your customers goes beyond just know that he's selling soap or he's selling rice. It's about what is the volume that is doing. And I believe this is what some of these advanced countries have done in the past years that is helping them. With this, if you do a back-to-back connection like that, it's going to enhance revenue for the relevant agencies. Thank you.
Thank the facilitator too much for what he has done. The reason is that he has shown us a lot of function of TSM. Because he has a lot of function and he can correct the wrong. Now the centerpiece of this IRS is to collect money, collect revenue. How can TSM collect money from IRS? Thank you. Collection. How can they collect revenue? Because we have seen how TSM can work effectively and can correct the wrongs. And they go out for collection of revenue? That is my question.
My name is Victor from Akwa Ibom State Internal Revenue Service. I just have one question in respect of your presentation on the use of the TMS. I want to know if for itinerary worker, somebody that comes to work in your jurisdiction that works maybe for like 3-4 months and leaves, whether the TMS system has provision for that to track such person in order to capture such person into the tax net to get your IGR.
Good afternoon. Though the first person that spoke had raised some of my questions. Lastly, I want to ask, for those in the category of Peter, of taxation, does your TMS has a provision where it updates the taxpayers' information? Because in your explanation, you did mention the TCC certification system, or it is us who is to provide that to the management for updates of their tax clearance information. Thank you.
Good afternoon. My name is Daniel Anko. I'm assuming I have 3 enterprises and I want to come register with IRS to make payment of taxes. Part of the challenges I would have would be I will need to have 3 phone numbers, because most of the time, the moment one number has been used for one enterprise, I can't use it for the other 2 enterprises. So do I have to carry, if I have five enterprises, do I have to own 5 lines to be able to do business with Cross River State?
Chief, this will be the last.
Good afternoon, ladies and gentlemen. My question is that, as explained by the solution provider, you have earned your income. When you earn this income, you definitely have paid tax on the income you earn. You have accumulated it to enable you buy land. You bought the land. You now go to register the land, or you are building plan. They give you as payment. You go to the bank. As you pay land registration, approval of building, as explained by you, I will go to the bank to make payment based on the assessment I've been given. TMS solution, explaining to us here, will deduct certain amount. Will this not amount to double taxation? Or how will TMS know that the taxes I have paid before when I earned income from all these sources that I accumulated to buy land, I'm going to register the land, or buy 1 or 2 vehicles or 3 vehicles, and I'm going to register the vehicle, that the tax I paid was inadequate? I don't know whether I am clear. I see double taxation.
Thank you.
Okay, thank you very much. I think I will take the first question, which is how do you handle biometrics on the self-service? I think that's the first question. Now, what we implemented in Cross River and indeed in some other states is what we call artificial intelligence facial biometrics. So that's why somebody can actually register from America, right? And it will still be unique. We are not using the fingerprints. Now, in some states, they want to use the put. So if you do facial, but anytime you come to port or you have any business with any of the outlets that also capture fingers, they will capture it. But if you go on self-service, what we are taking is your facial biometrics, okay? And it's still unique and acknowledged worldwide. Even in embassies today, it's facial they are using. Okay, now you also talked about integration to pull data from BVN and maybe CAC. Yes, we currently have integration through the JTB arrangement with FRS to connect to CAC, not just CAC, a whole lot of even NIM, NIM. Now, for the reason why, from our experience, we have found it difficult to make BVN even compulsory when it comes to TIN, is that only about 30% of Nigerians own bank accounts. Even the ones that own bank accounts, some are even in microfinance banks, so they don't even have BVN. So if you make it a compulsory field in registration of your taxpayers, you will lose a whole lot of data. A lot of people might not be able to register, okay? And in some states where even the social identity management system is somehow linked to the TIN project, you find out that even minors still get those social IDs, like in the Abia and the Imo states. So if you make all these compulsory, you are excluding all those people from your tax net. So, but for the integration with the CAC and all that, JTB has already provided a platform for the states, and that's currently being done. Now, you talked about number 2 question is wrong payment of taxes to wrong heads. And you also gave one example of somebody that make payments and he cannot process his PAYE. Yes, it's possible because you have paid with the wrong code. If you go to the bank today to make payment for taxes, I mentioned about the inter-switch pay direct. All the state codes are integrated to that platform. So, and what TMS is waiting for is notification from InterSwitch. So if you go to InterSwitch, instead of using code for PAYE and you pay it with maybe Wari code, of course, it's an exception. You don't expect that TMS will know that you wanted to pay for PAYE. Therefore, it will not process your PAYE because you've gone to pay to the wrong code. Now, the question is, when such a scenario occurs, then you have to involve the board people and they go through the process and correct it. So it's normal with any system. If you pay or do things not the way it should work, of course, these issues will occur. Now, somebody asked me whether TMS collects money for board. That's a massive question, and I think I've answered it even in this presentation. And I want to also collaborate it with what my Oga said when he said, would it be a double taxation when TMS has collected part of the money you paid for your lands? So is that not collection of money? Is it even a bigger collection of money? Or maybe he's thinking that TMS will form leg and hand and move into the field. But he's already in the field when he's doing all this intelligent work, all right, and increasing the revenue. So TMS does collect money for the state, if I should answer that question. Okay, so you also, somebody asked about how can TMS track ad hoc staff. I think you are the one that answered that question. Itinerary staff. Okay, what do you mean by itinerary? Oh, okay, okay. Okay, but I want to ask you a question. Those people, do they pay PAYE? So it's a very simple thing. Direct assessment, direct tax. And so it's the same thing. They are captured in the system. The day they stop working, they won't pay again. So I don't think it's a problem, really. Of course, as long as they are captured well in the system. And like I said, the system is so robust that any way you want to capture it, it can still capture it. If you want to terminate their transactions after 6 months, it will be set like that in the system. So it does that. Okay, so you talked about does TMS allow for update of taxpayer information? There's no system that doesn't allow for updates. I don't think there's any system, including TMS. What TMS does is that is left for the board to decide what kind of information you can edit the system. All right. So it's that flexible. If the board decides that you can be a ma account today and tomorrow you are a different name. Of course, you know this has implication with your payment records and all that. Okay, so that is possible, but it's left for the board to decide which information that you can edit. Okay. Now, you talked about registration of enterprise. Somebody talked about how can he register his 3 accounts with his phone number. Now, the TMS, like I said, is built on uniqueness. All right. However, for enterprise, what we have done, I'm not sure I've gotten any complaint from Cross River, but like in Abia, enterprise are treated as a sole proprietorship. All right. So if you register company A under the category enterprise, while you're registering that company A, when you get to where the owner is, it will force you to put the individual ID of that owner. Okay? So if you put the individual ID of that owner, it will just populate the remaining information with the information of the owner. Now, if you come back again, you want to register another company, you pass the same process. So that way, you'll be able to register up to three enterprise under your name, because it's still under you. You are the owner. So it's not as if it's a different entity. All right. So, but I'm not sure if there's a complaint from here on this, but we'll take it up, and if there is, we'll resolve it. Okay. So maybe that is a contact, right? Okay, so the last one is double taxation. Okay, so, but okay, I want to ask the question, because I'm not too clear your question. Are you saying that you have paid tax before, as income tax? Okay, did it pass through the system? No, if it had passed through the system, that's what I'm trying to explain. Assuming now you go to land, and in this state, they implemented that before they issue anybody any land document, you must submit your... So what the system does is that when it generates invoice for you in lands, it will first of all check whether this customer has paid his income tax. If you had paid for the year in question, if you have paid, he's not going to deduct that. Again, depends on what the board sets. In some states, they made it that even if you have paid for the year, they will check as far back as 6 years, really. If you have not paid, because nobody goes to land to register a land, and he's going there because he loves the state. He's going there, so they want to get everything from you. And of course, you can't say, I want to abandon Cross River and go to Ahwebom and register the land. It's not possible now. So such revenues are where the state hold you. That's, they will just tie your head and you can't run away. So some states, they will take it, the system will check from 6 years back to the current year. If you have not paid it, collect every single dime of it before they issue that stuff. Just like C of O. So, but if you have paid, it's not going to do that. Okay, so there's another question. The role of Board of Internal Revenue in this TMS portal, right? And to ensure that there's consistency, you know, in the usage and all that. Today it's not APMA that is running the TMS for Cross River. It's the staffs of Cross River. And the staffs are also here. I'm sure they can confirm that. What we do is that we give them technical support. And if there are things they need beyond what is available, we also provide it. The board IT units are fully aware of the system, and will keep retraining and training. Even they themselves have made a lot of input in the current system that is being used, and most of those things have also been implemented. I think that's the last question. We are not here today, and they are doing it. So if we are not here, we are not the ones doing it. Our staff here are basically support staff to the board. It's the board staff that are doing the operations. Our staff? You mean the staffs? Our own payroll now. We are paying our staffs. They are our staffs, not the board. The board is not paying.
He was asking about the problem that will arise where TSM deducts, a taxpayer has completed, gone to the bank, completed the process, probably indicated the revenue code for land transactions. Then from the explanation, TMS, if it discovers that the taxpayer has not paid PAYE, for instance, or income tax, deducts the money meant for that payment and then credits income tax first. Update the income tax payment record, and probably the man will now be told that his money is not complete from the explanation.
And
so it's actually
TMS will also issue the man receipt
for payee for
Yes.
income tax, right?
Yes.
Okay, so the completed form will be of no consequence in this case. They already indicated revenue code.
Yes.
By the taxpayer, that's what the tax now.
No, that's why the system will recognize, mind you, the way the system is built. Now you have gone to pay for land, but you have outstanding bill for TMS, for income tax. So what the system has done is to first collect that outstanding bill. Well, like I said, it is an outstanding bill. So for the system to understand, okay, sorry, again, I'll give you another short story. Maybe that will solve this area. In Ebonyi State, somebody I think in 2014 or thereabouts, went to lands. He bought a land. He went to land to register it. When they generated the invoice for him, it was about, I think, 120,000. So the man saw the thing that it was too high. He abandoned the invoice, all right, and left. Obviously, went somewhere, got receipts, did his transactions, and concluded. Now, in 2010, no, not 2010. I think 2000 and the second tenure of this current governor, the man was made a SA to governor. All right. So he was mandated to go and get his tax clearance certificate. So he went to the port. He went to lands before. Now he has gone to board. So they did assessment. The board man gave him the assessed figure. So he went to bank, made payment, came back. The board man checked the system to print TCC for him. He said the money you paid is not enough. He said no. He brought out his pay direct teller that this is how much he paid. The man went back to the system. Already, when he was generating the invoice, the system prompted him, but he didn't look. He just continued. So now the man has reported it. He went back to the system and now saw a red flag on the system. And when he clicked it, he now saw that this man has generated invoice in the previous years. He now asked him, have anybody issued you any invoice before? He said no. He said, did you do any transaction in lands? Because we are talking about board now. This is also applicable in all the other MDAs. That's the way it was implemented in Ebonyi. So the man said, yes, but it's been long. He said, but the thing is still here, that he has debited you for that invoice. The man said, but that he paid that time, he paid. He said, how did you pay? He said he paid them at the ministry there. He said, okay, if you pay them at the ministry, go and bring the electronic receipt. The man didn't come back. So the only thing he did, he just gave them money there. They issued the manual receipt for him. He went away. So he went back to the bank and completed the payment. So the system issued him receipt for that land transaction and also issued him. But in the system, it will balance it. It will show you the report that you paid 100,000, 20,000 for this, 30,000 for this. So, but what you are saying is that how do you reconcile it from the bank side? It's not from the bank side. The payment you're making, like today in TMS, if you don't decide as you are sitting down now, go to the bank, use your ID and pay 300,000 into that account. If you log into your TMS account, you'll be seeing the 300,000. You have not gone for any services, but you have money in your wallet. So if you decide to tomorrow, maybe you know that in next year you might not have the cash, so you have gone to pay it this year.
by next year, the money will still be there as long as it has not been used. So when you get to next year and go for any transaction with the state, you still have balance in your account. They will use that money there and process your transaction. Okay? So that's...
So, first question. I know you said you are going to check. Is there a requirement, just to confirm, is there a requirement for different phone numbers or different...
No, there's not. That's what I'm trying to explain to him. For enterprise, it's treated as a sole proprietorship. So when you're registering enterprise, it's to request for personal ID, the one you use to register yourself, and it aligns it to you. So, but we have not gotten that complaint here. So, but we'll take it up with him. If he has that problem, it will be solved. Thank you.
Thank you very much, Mr. Sly Maku. Can we please put our hands together for him one more time? Okay, just before I move on, I would like to invite the Executive Chairman, Cross River Internal Revenue Service, to please step forward and make some few remarks. Okay, just before that, I would like to specially acknowledge one very strong stakeholder who has just joined us. I'd like to acknowledge the presence of a former Auditor General Cross River State, former Chairman Calabar District Society of ICANN, and the only Black man in the IPAS board, IPSAS board, sorry. Let's welcome Pastor Chris Etzem Young, FCA. Thank you very much. Sir, can you just move in front of it, please? Thank you.
Very distinguished taxpayers, members from CITN, distinguished guests. Good afternoon, everybody. Okay, I want to thank you very much. I know the last presentation was a very long one, but please, we deemed it necessary. Our colleagues from FIRS are here. About 2 months ago, we took time to listen to that presentation on Firemax Pro, which the FIRS did in conjunction with the CITN. I was privileged to be on that virtual presentation. And what we're saying to you, our very dear taxpayers, our agents, our consultants, is Cross River State, we have our own Firemax Pro, and we're running it for over 2 years. I want to give notice that by, like what Lagos and some other states have done, by end of this year, January 2021, we will stop accepting annual returns and the rest, manual forms. We want to go electronic. So please, we are giving notice. We're going to have more sensitizations and engagements between now and end of the year. But please, the pay agents, withholding tax agents, our taxpayers, our consultants, other shareholders, please take note. January 1, when you come to file, no more will not accept. The system is very robust. It says it. For your withholding taxes, no need copious paper with figures. Put it on Excel or any CSV format. Give us the names of your agents, their TINs, input it on the system, and the system generates your credit notes for you automatically, just like what FIRS is doing. So it saves everybody lots of trouble. For your payee, give us your list of your staff. If you have 500-600 staff, you want them enrolled, come to us. I will get my ICT team to come and roll for you free of charge. We'll get their things. You do their calculations, the gross, all the, you know, if there are any taxes, any remittances for NSITF and the rest. Simply do the calculation, put it on the system. The system will calculate, check adequacy. It will prompt you and say, it's okay. You can even pay online. So the information is stored there. And your staff are notified, your tax managers were notified electronically, and you have all that information because we don't want to be dealing with paper anymore. We saw what happened last year, COVID. It's a new normal. The system allows enrollment. Last year, people were paying taxes. Well, in Cross River State, while government agencies were shut down, IRS, where the essential services were working. People were paying taxes. People were enrolling from Canada, the UK, and where else? South Africa, Wales, Abuja, Lagos, all over the place. People were enrolling and paying their taxes online. Well, most of us were at home, because of COVID-19. We were working, but we had to introduce this technology to enhance our operations. So e-filing, e-receipting, you get your receipts real-time online. Sly was trying to explain, it's a very simple thing. You filed your annual returns, we assessed you, you refused to pay, you kept it somewhere. Then you now went to pay for something else, land and all that. All we're saying is that the day you come and you pay for that one, we'll say, Mr. Ogon, sorry, in 2016, you were supposed to pay 1, 2, 3 for this service. What happened now? Oh, I paid. Who did you pay to? Go and bring your receipt. And if you didn't pay, come and explain now. If not, let's collect the money you're owing us first. And let's talk about the one that we give you. It's as simple as that. Nobody's double taxing you. These are just controls in the system to reduce leakages. And the good thing with this billing system, it has multiple invoices. Kelly, for instance, he likes to pay his taxes on time. He always says, tell me everything I have to pay this year, because I don't want one invoice today, tomorrow. So I can tell Oga Kelly, waste management, the consultants were here. What is Kelly supposed to pay for this year for waste management? Henry, if he files his returns, in terms of under direct assessment, what is he supposed to pay? What other levy or fee is he supposed to pay? And we'll give you one invoice. Kelly, Oga, all your taxes, levies, the ones we can ascertain now, is this amount. And he pays. We give him his receipts. It's settled. So the system also allows us to do multiple invoicing, which makes life easy. And we are let you, if for instance, we said people can go outside, if you don't have a TIN, you can go out and register. Once we have your details, we raise an assessment. We alert you electronically and by SMS. So you don't even need, we don't want to be carrying papers, signing papers up and down. We notify you. Once you make the payment, your ETCC with your face, with a barcode which is verifiable, use your phone, the barcode launcher, check it and verify it. So the system offers these capabilities designed to make life easier for you, our taxpayers also, and for the tax service. So please, we're going to be having more engagements like this. Please feel free if you need clarification, if there are any challenges. I know, for example, Kelly, we had a running challenge with one of your clients, but I believe most of those have been solved. Most of, over 500 staff, we issued electronic tax return certificates. I can't get 500 pieces of paper I'll be signing. I'll get arthritis. So the idea is to make life easy for everybody. So please, distinguished taxpayers. Okay, please, yes, sir.
Challenge, I just noticed recently. I went to pay for registration with the Office of the Auditor General. That registration was supposed to be in the name of the firm. You know, the firm is the data is my personal data. But it is in the receipt in my name, and I think that the General Office would like to have the receipt in the name of the firm.
That's because you used your TIN. You used your TIN.
Yes, probably.
Okay, that's an error, something that can be corrected. But it's an error. It's not that fault. It's something that can be corrected, sir. Something. So I want to say a very big thank you, everybody. We're going to engage more on this. But please, we're serving notice by January for your annual returns. Please, we will not accept paper. And it's working. The system is working. For those of you like Kelly, when you want to file your monthly returns for your clients, please feel free to test the system. It makes it so much easy. Dan Uncle, I know it saves you to Trump and all the wahala. Okay. Thank you very much. Thank you very much.
Thank you, Mr. Chairman. Distinguished guests, ladies and gentlemen, I would like to move straight into our next presentation. Now, this will be on the topic, should states collect VAT? This is a very, very important topic, especially as it has to do with the economy of Nigeria at this point in time. And to do justice to that, I'd like to invite a former chairman of the Cross River State Internal Revenue Service, pioneer chairman Uyo and District Society, CITN, and former chairman Technical Committee Joint Tax Board, Elder Essien Okorebi, FCA, FCTI. The profile of Essien Basi Okorebi. Elder Okorebi holds 2 master's degrees, one in accountancy and another in international finance and management. He is the fellow of the Institute of Chartered Accountants of Nigeria, FCA, a fellow of the Chartered Institute of Taxation of Nigeria, FCTI, a certified forensic accountant, CFA, a project management professional of the British Project Management Academy, as well as a registered professional of the Financial Reporting Council of Nigeria. He has worked at very senior technical and management levels in the public sector, development sector, as well as the private sector. He has served a wide range of clientele, including banking, oil and gas, manufacturing, telecommunications, and power sectors as auditor and tax consultant, amongst others. He was chairman of the Cross River State Internal Revenue Service from 2004 to 2011. He was also chairman technical and appraisal committee of the Joint Tax Board from 2009 to 2011. He was also at various times member Cross River State Budget Preparation, Monitoring and Evaluation Committee, member Cross River State and Local Government Joint Account and Allocation Committee, member Cross River State Steering Committee for the implementation of donor agency programs and reforms. He participated in the review of the draft Federal Inland Revenue Service Establishment Bill between 2004 and 2005. He also participated in the review of the first edition of the draft National Tax Policy in Nigeria. As chairman technical and appraisal committee of the Joint Tax Board, he participated in the review of the draft of the Personal Income Tax Amendment Bill 2011. Mr. Okorebi was a pioneer vice chairman of Uyo and District Society of the Chartered Institute of Taxation of Nigeria. After his tenure in government, Elder Okorebi took up an appointment as a tax expert with Adam Smith International of the United Kingdom to support the British government in the implementation of growth and employment in states Jump Street program. During this period, he led the team of national and international experts to successfully deliver a tax component of the Bees Jump Street project in the South-South and Southeast geopolitical zones within the specified period of 5 years. As a tax expert, Elder Okorebi has represented Nigeria in various technical and professional fora, including membership of Nigerian delegation to Commonwealth Association of Tax Administrators, CATA, world's largest body of tax administrators, with 46 member countries. Technical conference in Nairobi, Kenya in 2005. Represented Nigeria in the conference, represented Nigeria in the Committee of Qatar Technical Team in Lilongwe, Malawi in 2009. He was also a Nigerian delegate to the Executive Review and Study Group in Canada on design and implementation of Unique Taxpayer Identification Number, UTIN, infrastructure and systems under the auspices of the Joint Tax Board and Federal Ministry of Finance. Elder Okorebi, till date, is a holder of licenses to practice as chartered accountant, management consultant, tax specialist, project management professional, and forensic accountant. Mr. Okorebi is currently the managing partner of Essien Okorebi & Co. Chartered Accountants and Tax Consultants, and the principal consultant of Perspector Watts Consulting Limited, Government Reform and Financial Services since 2017. It might also interest you to know that he is married with children.
Good evening, everybody. Before now, I would have been very excited to work on this topic. But as it is, we all know that the matter of VAT is presently sub judice. It is sitting somewhere in the court. Therefore, when you see me shying away from some slides, it's just because I don't want to be accused of contempt of court. What I am going to say today is just going to highlight some points and some issues because of the controversy that had rocked the Nigerian tax system and indeed Nigerian economy over the past couple of months. So we are going to take the slides and remind us of some issues and some facts regarding value-added tax. And then the answer to the question whether or not states should collect will now rest with us individually. And I also know that at the end of the day, I may not be able to have one house. The house will definitely still be divided. But in dividing the house, you'll be able to have one or two reasons to stand on either side of the divide. Sorry, technology is messing us up. Okay. One minute. Very sorry, I wanted to. Now we are going to look briefly at the background of VAT, the components of value-added tax, issues surrounding the reconciliation, the tax authority, the issues around VAT collections by state governments, from my own point of view, from the point of view of practice, and from the point of view of what has happened in the past 28 years. And then we will allow the court to decide. Value-added tax, we all know, is a tax payable on the supply of goods and services at different stages of product supply and service delivery value chain. The burden of tax, the burden of VAT ultimately falls on the final consumer. VAT may be paid at different stages, but who suffers the burden? It is the ultimate consumer. And of course, VAT is one of the newest taxes in the world. The first country in the world to introduce the administration and collection of VAT was France, and that was sometime in the 60s. None of the past 11 constitutions of Nigeria made mention of VAT. Nigeria had 11 constitutions between 1914 and now. The Lugard Constitution of 1914 talked about, just made an introduction, if you read it, just made an introduction to the taxes of produce. The Clifford Constitution, which came in 1922, was more or less a replica of the Lugard Constitution of 1914. Then sometime in 1944, you have the Richards Constitution that made an improvement to trade, taxation of trade and commerce. Macpherson Constitution did not even go there at all. Up till the Littleton Constitution, the first time that the Nigerian Constitution, that we had 5 during the colonial era and 6 during the, after Nigeria had independence, starting with 1960, the Independence Constitution. It is only the Republican Constitution that talked about the difference between the taxation of trade and commerce and the quantum of the produce that are being bought. But none, even till now, had talked about VAT. VAT is a consumption tax that has been embraced and adopted by many nations across the globe because it is difficult to evade and relatively easy to administer. Before now, between 1966 and 1992, you have various states, the government collecting sales tax. But in the course of that, there were complications, there were issues. The states and one state and another, between the states and the federal government. So in 1993, the concept of VAT came forth. And Nigeria, during the military regime, enacted and introduced the VAT under the auspices of the VAT Decree number 102 of 1993 to replace sales tax, which had been operated on under Decree number 7 of 1986. And those other decrees, that the sales tax decree, was repealed. The VAT decree predates the 1999 Constitution. The people who drafted or crafted and passed the 1999 Constitution lost sight of the fact that there was a gap, a lacuna somewhere, that there was a law existing which had to do with the states, but being collected by the federal government. One thing that they should have done was to bring it into the Constitution, but somehow there was an oversight. So the Constitution was operating on its own without any issue regarding the VAT, while 1993 VAT was still 1993 law. That's the decree. All they did was in 2004, I think they were all now codified. Before the enactment of the Finance Act of 2020, the tax remained at 5%. And just this year, it was increased by 50% to 7.5%. And this also, as a point to note, is one of the most popular taxes in the world, is being practiced and adopted in over 150 countries worldwide. Some countries refer it as GST, Goods and Services Tax. VAT has been an interesting tax. It has been one of the most successful taxes in Nigeria, right from the first year of implementation in 1993. VAT was competing with petroleum profits tax and the company's income tax. And when the 1993 result of VAT was reviewed, it was voted as one of the best performing taxes on the first year of introduction. And in 2020, VAT dislodged the petroleum profits tax and pushed petroleum profits tax to the second position, because it used to be petroleum profits tax that used to bring in the highest revenue. And VAT, in 2020, VAT claimed the top spot at 1.53 trillion naira, relegating the petroleum profits tax to 1.52 trillion naira, followed by the company's income tax. Still, that stood at 1.41 trillion naira. And VAT collection as at 2020 was calculated to be about 1% of the nation's gross domestic product. The point that should be noted in these statistics is that over 50% of the 1.53 million or trillion, if the data is anything to go by, over 50% of 1.53 trillion collected from VAT in 2020 is from import VAT and international non-import VAT. We are driving somewhere, and that's why I'm bringing these facts out, so that we can understand when we now want to take a decision as to the jurisdiction or the tax authority that should administer tax. Now, note that VAT collections from import and international non-import transactions, which constitute over 50% of the 1.53 trillion collected by FRS in 2020, are outside the state's jurisdiction, as the administration of ports and other international transactions are administered by the federal government. That's another point that we need to note, so that we take a decision as we go forth. VAT collected by the Federal Capital Territory, that's where most of the contracts and other things are, transactions are carried out. VAT collected by FCT of 202 billion in 2020, in addition to the value-added tax collected from import and non-import international transactions in 2020, constitutes more than 60% of the total VAT collected by the FIRS in 2020. That's another point we really need to also know. VAT can be generated from the following transactions. Of course, the intrastate or intralocal government transactions. What I mean is that the VAT that you pay from the purchases of goods and services that starts its operation within the states, produced in the states, consumed in the states. That's what I refer to as intrastate or intralocal government transactions. Interstate transaction is where maybe the input VAT, somebody is manufacturing and pays the VAT in Ogun State, comes down to Cross River State, completes the production, and then collect the VAT here, maybe the output VAT. That's one feature of this is the reconciliation of inputs and output VATs. That's where the problem is starting from. That's where the problem starts from, reconciliation of inputs and output VATs. And then from international transactions. International transactions, of course, you know, are outside the purview of the states. Now, I am just putting the facts together so that it will help us in looking at the issues later. VAT revenues are shared as followed. We know that 20% is shared on the basis of derivation, 50% is shared based on equality of states, and 30% is shared based on the population of the states. Output VAT is VAT which you must calculate and collect when you sell goods and services, provided that you are registered in the VAT register. You can only collect VAT if you are a registered VAT agent. You cannot just go to the streets and collect tax, VAT, because the VAT that is being collected must be accounted for, and those data must be constructed by the relevant tax authority. So the first step towards the collection of VAT is registration of this VAT with the relevant tax authority, in this case, the Federal Inland Revenue Service. Output VAT must be calculated both on sales to other businesses and sales to ordinary consumers. You must also calculate output VAT when you withdraw goods or services for private use as a registered business. You cannot say because you are the owner of the business, when you withdraw goods from your business for private use, you cannot pay VAT. Once you consume goods from your business, you still are liable to pay VAT on even those goods that you have consumed from your business. And output VAT must also generally be calculated when you draw goods from the VATable part of the enterprise for use in the non-VATable price. If you are manufacturing education products, for instance, which are exempted from VAT, and you use maybe the materials from one section or one subsidiary or one division of the business to supply to the procurement or the production of education materials. You cannot say because education materials are exempted from VAT, therefore you will not pay VAT on these other VATable goods which you have input into that other section of the business. Now, when talking about what input VAT is, it is defined as the VAT applied to company purchase of goods and services by your business. Essentially, this is VAT that was already paid by your business on those transactions and can be later deducted in your VAT returns. And as I said, and I will continue to say when we are looking at the issues, is that I have not known, maybe they are, but I am yet to know the country that administers VAT at subnational levels because of the issues of this nature. But maybe further research will bring that about when we are done with this. Input VAT is VAT which is included in the price when you purchase VATable goods or services for your business. Deductions are normally possible on a VAT return provided that the business is VAT registered in the country where the transaction is taxable. VAT, like any other balance sheet item or statement of financial position, is easy to reconcile as long as there is a proper ledger accounts properly maintained monthly. All VAT receipts are accounts payable, while VAT payments are accounts receivable. This will not include VAT on overheads like COT, bank charges. And at the end of the month, the ledger balance should indicate the position whether to refund or carry the balance forward. Where the balance is on credit, it means payments should be made to the VAT authority with the necessary VAT remittance forms properly filled. Even with debit balance, they must be returned to VAT authority. And the basic approach to VAT reconciliation is based on assumption that all the sales amounts are VATable and transactions are properly and effectively recorded. The tax authority collecting VAT presently. VAT is centrally administered by the Federal Inland Revenue Service in accordance with the provisions of Section 25(1) of the Federal Inland Revenue Service Establishment Act of 2007, which says the service shall have power to administer all the enactment listed in the first schedule to this act. Then number 5 on the list of that first schedule of the Federal Inland Revenue Service Establishment Act is the Value Added Tax Act, number 102 of 1993. Although the 1999 Constitution does not expressly mention VAT, sales or consumption tax, even though the VAT law predates the 1999 Constitution, Section 163 of the 1999 Constitution states that where under an act of the National Assembly, tax or duties imposed in respect of any of the matters specified in item D of part 2 of the second schedule to this Constitution, the net proceeds of such tax or duty shall be distributed amongst the states on the basis of derivation. Section 163 further states that where such tax or duties collected by the government of the Federation or other authority of the Federation, they shall be paid to each state at such times as the National Assembly may prescribe, a sum equal to the proportion of the net proceeds of such tax or duty that are derived from that state. In the early years of VAT introduction, between 1993 and 1996 or so, filing and payments were made based on branch locations. This is the practice that the states want to return to administer their VAT at the state level. The truth is that we have passed that level. When you look at the framework, the mechanisms of VAT administration, you will agree that we have passed this level. This practice was complicated, especially with respect to offsetting of input against output VAT from different states. That was the problem, and that's the issue, and that will continue to be the issue until, except the new law that comes out says the VAT must always be at the point of consumption. And if it is at the point of consumption, I can tell you technically that VAT is not going to be at 7.5% as it is. We will be talking about 10, 11, 12. Why? Because the seller, the producer of the goods will still want to, in order to break even, will still want to push the input VAT along with the output VAT for the ultimate consumer to pay. Since filing and payments were made at branches, at branch levels, or say state levels, importers who clear their goods at a Apapa wharf, for instance, and pay their inputs VAT at the wharf to enable them clear their goods, will not be able to offset such inputs VAT with the output VAT if they are selling their goods outside Lagos State. Now, these are the issues that kept coming in the initial, at the onset of VAT administration. And it became a very serious issue. That was why the reconciliation and all those ones were now centralized. Let us look at the issues around VAT collections. We have been looking at issues around VAT collections by the states. And let us be very honest and sincere. The FIRS has 28 years experience in VAT collection and reconciliation to get to where they are now. And I tell you, they are still improving. They are not yet there. They have not yet been able to get it 100%. But they year by year, they keep improving. And I am sure that the federal government had invested heavily in improving the infrastructure and capacity of the FIRS for collection and reconciliation of VAT. If you follow this clearly, you'll discover that infrastructure provision, capacity building of staff members, etc., the costs had been huge. And that cost could easily be offset because of the central collections. If the collection of VAT is decentralized, this cost will have to start afresh, and you still have to, the states will still have to incur this cost. It might take some states over 30 years to get to the optimal levels of collection and reconciliation in VAT. We will see that when we go into the numbers. VAT reconciliation. This was the issue that led to the FIRS creating a central system of filing and payment of VAT about 10 years ago. This means VAT is currently filed and remitted centrally by companies based on their head office location. We will look at the headquarters effect in the next few slides. A huge investment in technology, personnel, and infrastructure is needed at the state level for them to be able to collect and reconcile VAT in order not to increase the level of inflation in the country. The second area we should look at is the undue advantage by some states over other states. Some states over some, advantage of some states over some states. Now, Lagos and Rivers, for instance, are feeling bad that they are collecting more VAT than the other companies or the other countries, and therefore they should be left to do that. But on a closer look and proper analysis of that claim, is it true? If you ask me, I will say no. If you ask me, I will say no. And I will tell you, we will see as we are going. Now, let's even take the first point. The banks, the telecom, the construction firms, and the rest, they all have their headquarters in Lagos, for instance. MTN, Globalcom, they all have their headquarters in Lagos. But you who banks in First Bank, you who uses a mobile phone, you pay VAT on the calls made and data made. You who use construction firms, maybe Julius Berger will come and work here, and you pay them. All the VATs that are collected in the various states, if you look at the accounting structure, the accounting system, they are all centralized and they are all remitted to Lagos, and then they pay from one point by the head office. That's what they call the headquarters effect. So the states, when you use the bank services, you use the telecom services and other services, the VAT that you pay is not recorded, is not remitted by the branch here in the States. They are all controlled in Lagos and they are all remitted to Lagos. The issue will now be when the states begin to collect, the state will tell you, hey, if you are here, we have to audit the transactions that are carried out within the states. You cannot send it to Lagos again. You have to send it to here. And what is the meaning of that? It means that the headquarters and the entire company will have to reform, restructure, or change the accounting system to decentralize those returns and make them state by state. That is going to be the next issue. By the centralized system of VAT collection in place at the moment, they all remit their VAT from the operations nationwide to the head offices in the big cities. This practice gives the big cities, as mentioned above, an undue advantage over the smaller states when it comes to VAT collections from states. This artificially inflates the VAT attributed to Lagos while reducing the VAT revenue attributed to other states. It will then appear as though the smaller states are not generating enough business activities to enable them earn more VAT. These issues are neither here nor there. But once they are properly analyzed, you'll be able to answer the questions yourself. Now, let's face it. I have made attempts to visit almost all the revenue authorities, almost all the state BIRs in this country. I've made that effort. And because of what I was doing at the time, I was in a position to look at their systems, what they were doing, to look at their capacity, and so on and so forth. And by the way, what you see in Cross River State, and you still say you need more, when you go to other states, you will know that Cross River State is far ahead. But that's the talk for another day. But some states will be stranded. That is the truth if this issue goes the way it's going. The positions of all states will be negatively impacted by lack of capacity to collect, difficulty in auditing and compliance, and higher cost of collection, which may be up to 25%. That 25% is just it's a miserly estimation, especially in states where consultants and other forms of agency structures are used for tax collection. A huge investment needs to be made by the states before they can maximize the collection of VAT. People will pay more, but the government will collect less due to inefficiency of collection system, because the states will have issues with curbing of revenue leakages. They will have issues with rationalization of the assessment criteria. They will have issues with the strength of their collection machinery. Some will even have issues with sensitization of stakeholders. Some will have issues even with enforcement using the instrumentality of the law. The enforcement of VAT, virtually everybody pays VAT. But if you put FIRS side by side with companies' income, companies and individuals side by side, you will see that if you're in business, you will know that for now, FIRS concentrates their enforcement on non-limited liability companies. Why? Because they already have the companies, the limited liability companies, in their hands because of tax clearance certificates. If you go to FIRS to apply for tax clearance certificate, if you have not been filing your VAT, you're on your own. If you have not paid your VAT, you pay. Otherwise, they will not give you the tax clearance certificates. The budget for enforcement is mainly on the enterprises. But when it comes states, the states will have to make a budget for enforcing enforcement for the states, big companies, small companies, and everybody. So the cost of enforcement of this will be much more if the states are to handle them. Because a huge investments need to be made by the states before they can do that. Over the years, let's face it, this is a learning program. So let's tell ourselves the truth. And please, I'm not using Cross River State as a point under focus, because if you use it, you will argue with me. Because apart from Lagos, I can tell you, at least I have been able to know what happens in most revenue authorities. Apart from Lagos, Cross River State has the best, in State Board of Internal Revenue, the best tax management system. And I'm not joking about it. If you even look well, because of the massive nature of Lagos State. Lagos State has how many million people? How many million companies? They have all the infrastructure, but they may not be even as efficient as Cross River State. Because Cross River State has a manageable taxpayer database. So in terms of efficiency, Cross River State will be better than Lagos, because if they are as efficient as they are expected to be, 40-something billion naira revenue a month is negligible. Lagos State should be collecting not less than 100 billion naira as revenue if they do all that they are expected to do. So when I'm talking about the weaknesses inherent in some states' internally generated revenue, think about Zamfara, think about Gombe, think about Jigawa, think about etc. So those are the issues I am going to talk about. Over the years, states have not been able to maximize their revenues from other sources. As such, personal income tax, stamp duties, and property tax, how can they now maximize collections from VAT? The question is, statistics don't tell lies. Statistics don't tell lies. In 2020, the combined internally generated revenue from personal income tax alone was 844 billion naira from personal income tax. Whereas, of course, our closest benchmark entity in terms of economic indices and fiscal policy index is South Africa. South Africa, on personal income tax alone, in 1 year, generates about 12 trillion naira from personal income tax. By the time you convert it from dollars into this and so on, that is what it is. And of course, you cannot blame Nigeria. Every state, you will see when we roll out those figures, every state on the 15th or 16th of every month, they go to Abuja, come back gleefully with a fat check and pick their bills and wait for the next month. So how committed are they going to be in the tax? When you put VAT side by side with the collections of stamp duties, ground rents, and other revenues, you will know that it has not been easy. Even now, as it is, we are going to see what is even being generated as efficient as FIRS is. Most states' revenue collections are politicized. They use experienced tax consultants, but they also use inexperienced tax contractors. While some who are wise will use the experienced and professional consultants, some will give consultants collection consultancy based on political patronage. So the moment the state takes over VAT, some of them will go, who are friends to governors, will tell the governors, hey, how much are you collecting now? 23 billion. In fact, from next month, I'm going to give you 50 billion. Contracts are signed. Before you know it, cars are being stopped on the way. Companies are being sealed up left, right, and center. Roadblocks everywhere. And before you know it, issues, there will be commotion everywhere. There will be higher cost of goods and services arising from input VAT claim and refund complications, in addition to items which are not exempted under the state's VAT laws, such as rent. I don't know how many of us had read the VAT law in Rivers State. If you've read the VAT law in Rivers State, you will discover that while the federal government has given an exemption to small companies, companies having 25 billion, less than 25 billion naira turnover, in that law, if you read it very well, they don't exempt anybody. So a barber, you pay VAT on barbing services, you pay VAT on wheelbarrow services, and everybody pays, except they amend it. Maybe because the law was passed in a hurry, but I have read the law. I didn't see any exemptions there. In addition, there will be incidents of double taxation due to likely conflicts between origination and destination principles in different states. Worse still, when the reality of inability to implement VAT hits home, many states will inevitably introduce sales tax with its cascading effects. What is the difference? It is the same mechanism that you are going to use in collecting sales tax that you will use in collecting value-added tax. Even the sales tax that the states were collecting before, what are the numbers? What are the numbers? Well, local governments will be worse off. We know why. Some states are prescribing lower rates for local government in the sharing formula. That's not part of it. But we also cannot ignore these issues, because if the states decide to collect, because of the wide nature of the database, they will need the services of consultants. When you even talk about equity, everybody's looking at equity. People are talking about how equitable the sharing is. It is because the money is there, and it is because the administration of VAT, to a reasonable extent, is efficient. That's why people are seeing the numbers all over the place and causing trouble. But I know that when the chips are down, there will be a lot of complaints. Let's look at this. About 30 states accounts for less than 20% of VAT collection. About 30 account for less than, which means 6 states account for 80% of the total VAT collection. The Lagos and Rivers State, currently in the eye of the storm, are estimated to account for over 70% of the VAT pool in Nigeria, with Lagos as a standalone contributing about 55% due to the high concentration of economic activities in the state as a result of its strategic importance as a commercial capital of Nigeria, making a huge contribution to the gross domestic product of our country. The above analysis has always led to the call for equity and fairness in the distribution of the proceeds. I would have been more comfortable if these states had said, okay, let us increase the percentage of the derivation principle. Instead of derivation getting 20%, let derivation even get like 50, so that others can be okay that one will be okay. But the issues that will come if you say everybody, every state should answer its name, we will have to go back to the drawing board. Now let's look at the numbers. These numbers you are seeing is the latest. It's up to last month, it's up to August. These numbers were published on September 18 by Vanguard newspapers, and we took steps to verify their source. So we are going to rely on it for this purpose only. Now, the second column has the states. The third column has the VAT generated by each state. And the third column shows the VAT allocation. What happens is every state contributes to the VAT pool, and it is now shared according to the formula that we have already seen. And you see that Abia for 8 months, the VAT derived from Abia State was 2.2 billion naira. And Abia got 20 billion naira. When you look at the figures on the face of it, you will see the inconsistency. You will wonder what's going on. If you analyze the figure further, you'll be tempted to protest. But let's see how it goes. Look at Benue State. Benue State is reputed to be the food basket of the nation. They produce food items, yams and so on. It's not vatable, but somehow you need to eat. So they don't, in fact, the higher proportion of their businesses is agricultural products. So Benue, 1.2 billion is derived from Benue, but what they took home is 24 billion. Now, when you see that, and this is our state, what is derived from our state for that period was 2.3, and what we got for this period was 20.47. Now, when you go to Ebonyi, if we follow, you will see our line of argument. Ebonyi brought in 7.89 billion and got 18 billion. But Imo State got 1.9 billion and they get 25 billion. Ebonyi got 7.9 and got 18. Imo got 1.9 and got 25. We have not finished. Katsina got 3.7 billion and they went on with 31 billion. Kano brought in 24.4 billion and went on with 47 billion. Why? It's population. They use population to share, and the population is very comfortable. They got it on equality. Derivation was only 20%. So out of the 70%, 80% that is left, they use population to get a huge chunk and smile away. Same with Katsina, same with Kebbi. Kebbi State had 1.2. They generated just 1.2 from Kebbi State, and Kebbi State went on with 22 billion. Now, Lagos generated 429 billion and went home with 139 billion. So it is Lagos. In fact, it is Lagos that should really, really cry. Because I'm coming. Because if you look at even the River State that started the whole trouble, Rivers State that started the whole trouble was managed to get more than 50% of what they collected. The Lagos got just about 30% of what they collected, while Rivers State got more than 50%. But they are the ones who started the trouble. Now, let's look at Zamfara. Zamfara State did not even get up to 1 billion. They got slightly above $500 million. Look at it, 598 million. But they went home with 35.7 billion. Now, when you look at Ogun State, for instance, that derived 11.8 billion, and compare with somebody who didn't get up to 1 million, going home with 35 billion, and the person collecting 11.8 billion, going home with 25 billion. These are the issues. The truth is that when you look at these figures, you get angry. But when you analyze the figures again, you know that sometimes you have to look at the story and the spirit behind those figures, because it may not be this rosy when it is the other way around. Now, the question is, if federal government's current allocation method is reviewed and the principle of derivation is applied, whereby states that contribute the highest VAT are allocated a larger pool of the revenue, the states will most likely forego their push to collect the VAT themselves. This will ensure VAT is still collected centrally. What I was expecting Rivers and Lagos to fight for was to say, hey, for goodness sake, how can you give 20% to derivation and give so much to population? If they are so thickly populated, they should bring in the VAT. Some of them will deliberately refuse to even collect this VAT or deal on items that collect this VAT, and so on and so forth. But that is not, those are not even very strong points to make. But something that is a little bit more equitable would have been to say, hey, why not make derivation 50%? Make derivation 50%. Make population 30% or 20%, and make equality 30%. Everybody will say, well, but when you are talking of derivation, the whole states collecting on themselves, one, they will not hit what is already on ground. Number two, Lagos State will still insist that from the head office, bring everything here. And I trust what Lagos State can do to enforce that. And that will be a problem. The question, what if each state, the VAT on imports and non-import international transactions are set aside? These are questions that we have to answer. Are set aside and distributed on the basis of equality, while VAT on intrastate transactions are shared on the basis of derivation. This is another way out, another option. You say, okay, states, if you are collecting it on yourself, you will have issues with collection on imports because the customs and excise is there on the exclusive legislative list. International transactions is a no-go area for states and so on. Let's collect that one. And even when we collect that one, let us share it on a certain basis that will give more percentage or more share to the derivation principle. These are all very options that many options that could be explored. And what if it becomes mandatory that reporting of turnover of businesses are broken down according to states it is derived? Restructuring of accounting system would be an issue. What that happens is, if let's take banks and telecommunication industries, for instance, say, look, restructure your accounting system. Restructure your accounting system. If you have a shop in Calabar, everybody who uses MTN in Calabar and bank in Calabar account for it separately and then remit this as Cross River State. Same with Ogun State, Imo State, and so on. You see that the distribution will be different. That too is another option. I'm just opening these options for us to look at how these things could be resolved amicably. Because if you want to say states should collect, after 5 years, we will go back to square one. And if you go there and FIRS says, sorry, we can no longer collect, what will you do? That will be the end of VAT, which promises to be one of the best revenue generating tax heads in Nigeria. So after all these ones, what do we do? Let the courts decide. Thanks for listening.
For this very topic, this clap was not good enough. I think we can do better by standing up. Let's rise up and give him a standing ovation. Thank you. Thank you. Thank you. I'm very sure we have a lot of questions to ask. I would like to have the panel session now. To join the speaker on the podium as moderator, I'd like to invite the representative of Ntufam, Professor Peter Oti. I'm talking about Dr. Sunday Effiong, to please kindly step forward. I also like to invite the Executive Secretary of CalCIMA, Mr. Ken Asimita, to please join us here. Pastor Kunle Oladokun. Pastor Kunle Oladokun. Is he here? Pastor Kunle? Ola Okunola. Ola Okunola. Thank you. Yes, Ola Okunola is representing the Honorable Commissioner for Finance, Cross River State. Once again, we'd like to invite Pastor Kunle Oladokun. And last but not the least, our own Pastor Chris Young.
Thank you very much. Good evening to all of us. I am here representing Ntufam Professor Peter Oti, who is unavoidably absent on official assignment. He has sent his goodwill to all of us here, especially the Cross River State Internal Revenue Service and the the Chartered Institute of Taxation of Rivers State here. He has said I should inform us that the topics so discussed in this meet could not have come in a better time than now, especially for the last soup we have eaten at the bottom of the pot. I am speaking the mind of the chairman. Said the sweetest soup and the best soup is always at the bottom of the pot. And you can agree with him that it's always sweeter at the bottom of the pot. I don't know if we had other standing ovation apart from this one. Can we give him a round of applause? Ladies and gentlemen, we must agree that as of today is a thorny issue. Thorny and breaking, dividing issue. But I know the court will still hold sway that we still remain one indivisible entity, whether economically, whether fiscally, or whether vertebrally. We shall always remain one. Mr. Ukurebi had done justice to it, and we are all witness to it. And here in the panel, we have able, tested, trusted discussants to bring down to earth what we have heard and what we have inside us. I want to implore you, I know you have, almost all of us may have questions to ask. Please don't hesitate, put it down and forward to us. We will also discuss. And also if you have contribution at the end, you will also be given opportunity to also contribute. What we are doing now is not just a state discussion. It's a national discussion. And I know your voice must also be heard. And I want to appreciate the state for also adding to the debate nationally on issue of VAT. And it could have come in any other time better than now. I want to say the man who represents FIRS was supposed to be here. Is he here? I was going to see a fight between FIRS and Cross River State IRS. I don't know what will happen now. We are going to see what happens as we move on. As we move on. But the presenter has said it is beyond what the eye can see. So let's go. Let's continue. There are many questions we are going to address in this discussion. With no special order. We are going to treat them as they come. I want to read first the first question we have to look at. Don't forget, the issue is, should states collect value-added tax? That is the general question. And based on what you have in your mind, or on your mind, we say the debate on who should collect VAT has been viewed in some quarters as a veritable opportunity for economic reconstruction in Nigeria. Note, some people say this is one of the aspects of reconstruction we have been asking for. And now we are starting it from the perspective of the economy. So is VAT collection by state an economic reconstruction strategy? Economic restructuring strategy? Now, if it is this, we are saying, what is it for Cross River State? If it's a restructuring strategy, what is our take for Cross River State? Not just today, but for today, tomorrow, and forever. Short term, medium term, long term. That is the first discussion we are setting in motion. The panel will dissect it efficiently and also deliver to you and also to us also effectively. I want to advise the matter is in the court and our discussion must be restricted to or not to allow it to be sub judice. Thank you very much. The question is on the table. What is the take for Cross River State? If we look at VAT collection by state as economic restructuring strategy, what is it? What is the take? We have now the floor open. Yes, sir.
Yeah, thank you very much. I would also like to commend the well-researched work of our HEBU chairman. When you look at the whole question here, the presentation has balanced everything out. It's not issue to decide whether to pay, whether the state should collect or the federal should collect as a straight court issue. But we need to look at certain issues that are actually causing the agitations. You know, we have a number of agitation out there. Is political agitation, which is out of the purview of the professionals there. This is economic agitations, which I could see that the audience begin to react very, very violently, having seen the figure presented by the chairman. Now, the point is this: the states that produce or that generates this revenue, should it not be better off? Do we look at the population formula that we are using to generate, to do the sharing of the value-added tax? Are they genuine? Are they valid? Are they productive? Now, Chairman gave instance of Benue State. Benue State, the full basket. Again, would this not lead to productivity in such states? The challenge those states may have is because they produce the food for all of us to eat without processing it. So it is time for them to begin to look inward. What quantum of our food production should go out, process or log? It brings us back to the primitive age that they taught us in the elementary economics, that we produce raw material and export raw material. That is what is happening to Benue State. And the advent of state collecting tax, VAT, may eventually make them to go to production, not just food, but processing that food and add the value that needed to be added for them to earn the money. Number two, you will look at the argument of Lagos State, the head office effects on the distribution. That can be handled in a way in that, take for instance, PAYE. The head office of First Bank, for example, process payroll for all the staff. And they still pay all those staff PAYE to all the states in the federation. So for me, it is not a barrier. It's something that we can look at. Also, we will need to look more into the issue I mentioned earlier on, that the states need to actually position themselves in the way that no part of the state, no part of the country is economically marginalized. Because we have heard the word oftentimes that some states are bankrupt, they cannot even pay state salary, which will eventually escalate the problem of insecurity. So we can't rule it out that, oh, if you cannot generate money, then you should perish. And that's where we need to articulate these things. And like we said, even if the court come up with a judgment, because I don't know the court that we actually judge on this matter than the professionals, and this is the highest body of professional in terms of taxation that should take this decision. Sir, Mr. Chairman, I will suggest that the communique from this meeting should be taken to other body of professionals in accounting and tax practices across the country, well debated, and the outcome of it, their recommendation should be sent to the National House of Assembly. Because I believe the judgment of the courts may not be the verdict that should actually give fairness, justice, and equity that is required on this matter. Thank you very much.
Thank you. Thank you very much. We don't intend to preempt the judgment of the courts. But I want to say this discussion should be internalized to Cross River State. What is it for us? Arising from what the numbers presented, how much we contributed to VAT, how much we get from. Should we push for collection of VAT by the state? Considering also the impediment he had pointed out, the collection costs, the collection capacity, the decentralization. Are we benefiting more from central collection, or are we going to benefit if we collect by ourselves? Please, let's look at that.
All right, thank you very much. First, like the very able presenter had said, where we are, unfortunately, because the matter is in the court and sub judice, and we don't want to be liable for contempt of court. So I may not be allowed to say, for example, that the fact that the Constitution has failed to mention the fact that VAT should be inside the consolidated revenue account or the federation account of the country, that automatically that item shifts into the residual list, which falls in the purview of the state. I would not also be allowed to say, for example, I do not want to fall victim to contempt of court. So I may not be allowed to say, for example, also that the fact that it's a residual matter, the state naturally should collect it. However, I'm also concerned the fact that, like what the presenter said, the state, the capacity and the ability of the states to collect. Now, the current structure, as we have seen the distribution and how this money is, it is clear that is inequitable. It is clear that the federal government has not been fair to all the states in the country. It is also very, very clear that they are robbing Peter to pay Paul. However, it is also clear that the feeding bottle arrangement currently in place, where the federal government is busy feeding all the states, is not a sustainable way of developing Nigeria and developing having even development across the country. So naturally, there are lots and lots of states that have the capacity to be sustainable. For example, you said we should domesticate it, Cross River State. We've talked about, my colleague has talked about the issue of the headquarters effect. Almost all the banks here, they have the capacity. Yes, I'm from the private sector. There's that concern that they may have to switch their accounting system. But like we have been told, there's a bank that is already doing this. So it is nothing new. It is not a technology that's going to be so difficult to implement. Now, most of the states have resources, like for Cross River State, for example. You would find out that Cross River State, arguably right now, but from our own statistics, clearly the leading producer of cocoa in the country. However, 85% of that cocoa is moved to Ogun and Lagos State to be processed where the VAT is now being paid without any benefit or value to Cross River State. Cross River State is the highest producer of palm oil currently in the country. Again, Cross River State is the second highest producer of cassava. Again, so you see that if all of these resources are harnessed, produced, processed within the purview of Cross River State, maybe, just maybe, Cross River State may be the highest generator of VAT in Nigeria. But again, like we said, if we look at that table, the political class, which I may not be allowed to say, intellectually may be lazy and not want to think about how to apply these things effectively, and may just be comfortable in contributing 2 billion and collecting 20 billion.
Thank you so very much, Chartered Institute of Taxation, for organizing this forum and giving us an opportunity to contribute. The moderator has asked us to domesticate this discussion to Cross River State. I think domesticating it to Cross River State is very simplistic. It's simplistic because what applies in Cross River State applies also to every other state in Nigeria. So, from what Mr. Oladokun said, which has been corroborated by the Executive Secretary of Commerce, Chamber of Commerce, the problem of the subnational governments in Nigeria is the lazy attitude to governance. And I'm taking this matter from the bigger than what we seem to see. The plantation economy of most states in Nigeria has limited the capacity of our production and income generation. And it started from the onset, from the birth of the present constitution. If we say we are a federation, it presupposes that every federating unit should develop its internal capacity to generate revenue to pay its bills. But because of the arrangement of the federation account allocation, every state sits down, waits for the end of the month, they go to Abuja, collect the money, and unfortunately, it's shared without any serious investment in infrastructure. And I'm sorry, but that is the truth. So, my take on this is that the arrangement in the Constitution is the major factor that has taken us to where we are today. The paper presenter made a point. I said, if we ask the states to collect VAT, would they be able to put a structure in place, given the quantum of experience that IFRS has had? That IFRS has had so much experience in this, and it would take some states, according to him, some 30 years to get to where IFRS has gone today. And I take exception to that. The problem is this: we allowed ourselves to prefer a short-term solution to a natural problem. Yes, the problem of reconciliation of sales tax in those days, because we willing to think holistically. We were not willing to be patient to think about providing a lasting solution to our natural problem. We now provided a shortcut. And who provided the shortcut? The military. So justifying that solution and giving the central relation of that to the IFRS, which has allowed them to have all that experience that we are talking about today, would have been a better arrangement if at that point that we notice this problem, we allow the states, everybody will sit down and will think and provide a solution. So justifying that arrangement is like justifying military administration in Nigeria because of poor democracy. It's like saying, well, this democracy doesn't work in Nigeria, let the military come and solve our problems. It's the same way. So for me, I'm looking at the bigger picture where we all started from. And it is not too late for us to go back and correct our fundamental error. That's my position. And moderator, sir, without prejudice to the court, and of course I know that even the court, before they finish they make their decision, they shall have also be picking information from the public. What does the public say about this matter? I mean, they are human beings. So I'm not sure. I don't think we are prejudicial on this. I don't know. I'm not an expert, but please, I'm not being prejudiced. My position is that it is not too late for us to correct this fundamental mistake that we've made. There is nothing wrong in assuming the court decides that the state should collect. There's nothing wrong in the Federal Inland Revenue Service surrendering their experience, their structure, even their infrastructure, and to the states, to a minister. Are we not talking about the same nation? See, the selfishness with which we run Nigeria, so-called federating system of Nigeria, is what is killing us. That's the way I see it. So I think we should be humble enough to accept that we have made a mistake, and then we can go ahead and correct our mistakes. Thank you.
Yeah. But before the next panelist, I want to correct myself. When I say we should domesticate, I didn't say we should shy away from the national discussion. But when we discuss nationally, let's bring our interests back home and see where do we stand. That is what I said. So we can discuss nationally and also decide locally what will be our interest. Thank you.
Good evening, everyone. Good afternoon, everyone. Commissioner for Finance sent his greetings. He's unavoidably absent in Abuja on official assignments. For me, after listening to Elder, I thought he should just tell us that we should go home because he has actually done justice to the topic. And for the sake of the argument and from the perspective of the state, the issue at hand has political dimension to it. Because if you look back at what actually, make the matter from Rivers State and all that, it has to do with some political issues. And if you look at it as well, for us as a state, what do we collect? As in, what do we generate and what is our, what do we collect from federal government? For us, it's a better position. But the question that we can ask is, can Cross River states do more Yes, it's possible. We can do more. But at the present state where we are now, can we meet up that target? I'm not sure we can. So it's a matter of, if we are giving time, like what Elder also said, so many states doesn't have the infrastructure. You can't compare 28 years of experience with if you just start tomorrow and say, we want to start collecting. It is not easy, definitely. So what I'm thinking is, or as part of suggestion is, we can, again, without prejudice to what the court will say, states can be given like some period, maybe 5 years, 3 years, 4 years, to prepare themselves. I say going forward by 2022 or 2023, you start collecting. And like what Pastor also said, it's the situation whereby if they can bring in political solutions where FIRS can, surrender their facilities, their experience, the people. The FIRS are made up of people from different states. They can say, okay, people from this go back to your state and help the states, to collect these VATs. It's a way to have a lasting solution. Because when you look at the argument of those states that are saying, they are the one generating so much from VAT, they are looking at, okay, derivation is just 20%. The population takes 30%, while equality takes 50%. They may be looking at, fine, can we not shift the derivation to about maybe 50% and allow equality to go back to about 20%, then population stays at 30%. Those are the things that we can look at, or more or less on a round table, rather than if you go to court, For me, it's also a matter of the rich trying to get richer. That is it. And if you see Rivers followed by Lagos State, trying to get judgment on those matters, it's just like to get more, where leaving the other states, in penury. And like what other panelists has also said, we cannot continue on the present, economic trend the way Nigeria is at the moment. We cannot. A lot of states rely largely on, pick up your allocation from federal government every 23rd or 22nd of the month. You go for FAC meetings, pick up the check, and you go back to your state. Nothing is being done. The chairman of IRS can bear me witness. We went on a study tour in March this year. High Commissioner was on that trip as well. And you see what Lagos State government, IRS, is doing in terms of improving collections. How they profile people, what the apparatus and stuff they've set in place to improve revenue. A lot of states are not doing that, and until we retrace our steps, to get to that level where you take responsibility. Because the truth of it is assuming court even decide, states, go and collect. How many states can effectively even collect those VAT? How many states? We can ask that question. You realize a lot of states, there will be leakages and all of that, But if we say, okay, fine, the next 5 years, state will start collecting. Prepare yourself, put in the infrastructure, put in the human capital, the human resources that you will need. And by so and so period, we start collecting. I think it may be a suggestion or a solution that we can adopt as well. Thank you.
Thank you very much. That decision will be done by the court. When do the states start to collect? For us, we cannot decide that now, but I want to inform us that failure is not. We can say that failure is not meeting success, or we are not succeeding. Doesn't mean we have failed. The utter failure is refusal to try. And economic laziness, and political waywardness has kept us where we are now. And I want to say that if you had intended to build a house and you don't put structures on ground, the house will remain unbuilt forever. A house must be built when we start to build it. FIRS started somewhere. And if there is a law that says state should collect, state will start somewhere. I want to inform us that all the bank branches have their daily returns per branch, daily returns, which they send to the head office. And they know how much they generate in that branch and how much cost they have incurred in that branch. So we cannot say we cannot coordinate. No. MTN office in Calabar also knows how much it generates from Calabar, from each unit. There's an account for each unit. And as such, we can leverage on that. We are all we are shying away from the capacity. Capacity is not built in a day. Cost of construction, it will be high. But then we are going to solve that because what the president has said is that more than 50% of VAT collected is beyond the jurisdiction of the state. That means for us to collect, we must expand the VAT net. Like River State has not exempted anybody. Here we say we produce cassava, we produce palm oil. That means those goods that are not vatable are going to be vatable. That's the meaning. That's the meaning. So now we can do it because FIRs are manned by human beings. Even our sisters and brothers are also there. And tax is built on the foundation of fairness. Let what is fair be done. We are not sub judice to the law, to the court. We are suggesting let there be a structure, let there be a thinking, let there be fairness, there will be justice in allocation. So that is the wrap up for the first question. I don't know if the presenter still want to say something after saying so many or so much. You want to say? Go ahead, sir.
No, well, since the moderator wants me to put in a word or two, because I think all my opinions have been made in the course of the presentation, but I know that we are crying every day for devolution of power, etc., etc. And devolution of power should start with taking responsibility, irrespective of the consequences, irrespective of the consequences. We should take responsibility. When you talk of FIRS handing over the infrastructure to the states, that should be discussed at a very high political levels, because I have been a member of Joint Tax Board for 80 years, and I know the politics of taxation across the nation between the different and the various tax authorities. That could be explained. But coming down to us, in the principles of devolution of power to the states and reducing the weight of the federal government in favor of the states, we can say, because of what is in the exclusive legislative list with regards to imports, non-import international transactions, and the ones collected by the Federal Capital Territory. Why can't we say that, for a start, let the state collect the intra-state and intra-local government VAT in the first instance? And since non-imports and imports and non-import international transactions are outside the jurisdiction of the state, the federal government, because it is under the exclusive legislative list, the customs and excise who enforce these things, in the exclusive legislative list. When they collect, they can also share either based on derivation or based on a more equitable sharing formula where all the states, or even on the basis of equality. However, but before that, I still believe that the discussion, this derivation principle, this sharing formula was imposed on us by the military. And I believe that in sharing, all the subnational governments should sit together on a round table and say, hey, what do you have in here? How are we going to share this thing? Are we sharing it equally? Okay, what is it? And jointly agree. Because since the states cannot collect this component of VAT, let the federal government collect. And in sharing, this is going to be the formula that will be acceptable to all. And in the case of headquarters effect, the ones in the headquarters, you can change the reporting standards. You change the reporting standards to provide for every company breaking down their turnover into the ones derived from each state, or break it down according to derivation, so that when I pick a published financial statement of First Bank, I will know that out of the turnover of several billion, so and so is from Cross River State, so and so is from Enugu, either by way of notes to the accounts or however or whatever, in such a way that the accounts itself will be very transparent and transparent enough. I know when I used to work in the tax office, when my people go to audit the banks and get the published accounts, everything there is consolidated. For you to even be able to use the salaries paid to Cross River to even be able to compare with the payroll that will be given to you becomes a problem. So why can't an accounting principle be put in place, reporting standards be put in place in such a way that there will be a software to decentralize or break down the turnover into states, so that we'll be using it to check these things and avoid the headquarters effect completely. And I think with that, the issue of inequity will be addressed. But for the time being, let the state start something. You can start from the intra collection.
That is a good summation. But I want to remind us why Lagos State collects more in VAT is their benefit of residence. Because all companies resident there, so whatever they do, go back to them. So if we devolve tax, VAT to state, the concept of residence will also be devolved. So that we will increase our collection here. And I think that's where we stand. And so we wrap up that session, and we believe the communique drafting committee is also listening to us. There are many preferred effective decision here, or solution here, that must be carried. That at last we say we should start from somewhere. That's what we have said in terms of Cross River State. Now let's move quickly to the second consideration for this evening presentation. Now, if states begin the collection of value added tax, how best could the tax authority secure and sustain voluntary compliance? That is the next area of consideration. If, for instance, the court at the end, we're not preempting the court, we're suggesting, assuming that's what comes up. The court said, states, you are free to collect tax, or collect VAT. How will Cross River State Internal Revenue Service now enforce or secure and sustain voluntary compliance. I want to start with you, sir. Let's look at that and see how prepared are we? How prepared are we to start starting from somewhere?
I think first and foremost, like the elder said, Cross River State Internal Revenue Service is one of the most efficient, revenue service in the country. Not because we are in Cross River. If you have been with them, and you see the level of work that you do, you appreciate it. Now, as I was discussing with Chairman when we sat down the other time, part of what people are leveraging on now is the use of technology, And we mentioned about Lagos State, where Lagos State started from, how they go about campaigning and all that, sensitization, letting people know their right and the need for them to pay tax. So for us in the state, as Cross River State, the moment you sensitize people enough about it, you put the processes that you require, system infrastructures that you need, put them in place, you realize that a lot of people will willingly, because they are aware of it, willingly, to pay. And like the discussion yesterday, we are talking about when people feel that sense of, belonging about what they use their tax for, they will be willing to pay. When people know, okay, fine, if I pay this tax, government is going to use it. The moment we remove that doubt between government or the political elite and the citizens, you realize that you have a lot of people coming in to pay their tax, the VAT, voluntarily. And from that as well, the Cross River State Internal Revenue Service, they have enough man capacity, they can take more. And because they have more responsibility, definitely that will, propel them to do more as well. Thank you.
Thank you very much. Ladies and gentlemen, I have been given a notice here that we should wrap up. And before we wrap up, we must exhaust everything. And for us to exhaust everything, I want to remind ourselves that the Cross River State Internal Revenue Service has a compliance structure on ground and can also be crystallized when we start implementing value-added tax. So I will call on Pastor Chris now to tell us what could be the concern of organized private sector if we finally agree to start collecting value-added tax. What will be the concern of private sector?
Thank you, Doctor. Before I make that contribution, permit me to also add to the issue of compliance. You see, when the people see what government uses their money to do, they will be willing to pay. Willingly, they will come and pay without any pain. So the onus is first on government to demonstrate the commitment to using the tax money of the citizens to serve the public, to provide services to the public. Willingly, the citizens will pay their tax. Then, organized private sector. Yes, I think the executive secretary should even be an appropriate person to say that. Let me give him, before I add something to it. Tell us.
Well, Pastor, since you decided to pass the mic to me, from the private sector, our biggest concern, first and foremost, is that we should be able, if it's given to the states, our concern is we hope we will not have issues of double taxation. Now, on the issue of compliance, that's our concern as it relates and dovetails into compliance. The collection efficiency within the state system. I mean, a lot has been said about Cross River State IRS's efficiency and all of that, but we know that there is still a lot of gaps that still needs to be corrected. We commend them for what they're doing so far, but there's still a lot of gaps. There's still a lot of
leakages. Because when you begin to look at Cross River State's internally generated revenue collection over the past how many years, you'd begin to see that at some point there will begin to be some dips. Those dips outside economic factors also had to do a lot with compliance, collection efficiency. Because I remember, I think Elder was part of that team that instituted the GEMS 3. A lot of work was done in terms of tax systems for Cross River State. And during that period when GEMS 3 was implemented, even the organized private sector that was involved in that process, we were actually encouraged, and we saw, and Cross River State's revenue began rising, significantly rising. But the moment those systems were abandoned at some point, it began to dip. So we are concerned about double taxation. We are concerned about the enforcement methods. Enforcement methods. We don't want to see situations where we are having fisticuffs. There's been a huge improvement over time, but there's still a lot of crude methods, going on out there. A lot of times we hear it's not from the state, it's from local governments, but we said, state, please assist the local governments get better in terms of their enforcement. So a lot of this, and also the fact that we want to see, like you said, service for the tax we pay. Once there's tax for service, once there's service for the tax we pay, I'm sure even the private sector will be willing to do more, work more, and support government more to increase its internal revenue generated service.
All right, thank you very much. Let me just add a little to what the Secretary just mentioned. For internal revenue, the structure is already in place. For VAT itself, the structure is already in place. Remember, VAT is not a tax that you are running after. The moment you consume that service, you pay. It's deducted by the service provider and is under obligation to remit through federal revenue as it were now. And if the authority changes, the same procedure goes on. And internal revenue puts in place strong software applications. The one they have now is robust. It can be improved on. It's growing. Federal revenue has improved their own as well in order to be able to handle this. That is all just we need. We don't even need much of physical enforcement again. It's just a matter of having a software that is end-to-end and be able to clip all these things that we are talking about. So for me, all those things are no problem. The concern of private sector, they shouldn't worry themselves. If you see anybody coming, all we need is political will of the state government to say, look, anybody harasses you, get him, call the so department of the internal revenue or government agency to come and pick up the person. Most of these things are not done by professionals. We are professionals in internal revenue service. They don't do that. It's the tout. And all those touts can be controlled. Recently, I heard the state government set up a revenue committee or something headed by one of the man of God in town and all that. So all these things should not be the fear of the private sectors. The ability to pay is there because as long as you can consume this water, if it is required, you automatically pay. Thank you.
Thank you very much. Thank you very much, and thank you very much. And double taxation if we must collect VAT. We also add multiple taxation if we must collect VAT. And we must not go crude, but collect VAT in a professional way. I want to thank the paper presenter, Elder Essien Okorebi, FCA, FCTI, for that erudite present. Can you give him a round of applause, please? I want also to thank my panelists, great panelists that have dissected in and out. And I know many questions you would have asked have been well answered. And we know we can start from somewhere. My name is Ntufam Professor Peter Oti. Thank you very much.
Thank you. Distinguished guests, ladies and gentlemen, can we please once again put our hands together for this set of panelists to appreciate all other speakers in this event, starting from the first day till today. Can we just put our hands together for all the speakers? And then this last round of applause should go to you, our very distinguished participants. Can we please appreciate ourselves? Just before I invite the chairman of the Communique Drafting Committee, it won't be proper that after this topic, we do not hear from the receiving agency. I'm talking about a member of the FIRS. So let me quickly invite Mr. Ase to please make a few words. Thank you.
Thank you very much, moderator. I want to really give kudos to Elder. I can't be saying, okay, the paper presenter, he did justice to that paper. In fact, if I were to present that paper, I don't think I would have done anything better. And he was fair in his presentation, and as he said, he was going to present the cases from both the federal and the state level, and he did that very well. It is left for us to consider and make our own decisions. There is, however, a point that he made that even himself did not emphasize, and so most of us have ignored the point. Most of these things we do have precedence. He told us that the first country to introduce VAT was France, as late as the 1960s. Up to now, up to 150 countries have introduced VAT in their countries. We have, out of these 150, I believe by the nature of the structure of countries in the world, almost 50% of these countries will be federations, will be federal, will have federal structures. And he did mention that he is not aware of any country in the world where VAT is done by the subnationals. This is a point we did not, maybe he did not emphasize and we did not. So, from precedents, countries that have some more sophisticated structures, more sophisticated citizens than we have, are unable or unwilling to implement VAT at the subnational level. So why do we want to go that way? The issue here, I know, is the issue of restructuring. Yes, it can start from here, but in the interim, and as he has told us, that if we, in the short term, if we start that system of VAT at the state level, more than 30 states will be at the losing end. What in the short term we should look for is the revision of the sharing formula. And as we revise the sharing formula, we must make sure the attribution also is revised. As the director, PRS and FIRS, I am responsible for producing the attribution indices that are used by FAC to share that 20%. We have been having this challenge. We have been trying to correct it, that issue of headquarter collection of taxes. The VAT law has a lot of gaps. Maybe the Financial Act 2021 will correct some of those gaps. The Financial Act, the VAT law did not specifically state that companies filing returns at their headquarters should attribute. We want them to attribute, but because the law did not specifically state, they refuse to comply because it will cost them a little more to do that. So the law, somewhere, the penalties specified in VAT law states that if you do not attribute, you'll be subject to some penalties. But the law itself did not say you should attribute. So that is the problem. But if that law is corrected, I think even the states can benefit more, because Lagos can now, all those companies filing at the headquarters can now start attributing properly. And then coupled with the fact that if the if the distribution criteria are changed in favor of attribution, then we will also benefit more. We should also consider one last factor. What if, when the VAT law is ceded to the states, then the federal government decides to keep the VAT on international transactions and imports? That will account for almost 70% of the VAT collectible in the country. So how would the state benefit in that situation? Thank you very much.
Thank you. Thank you very much. Thank you. I'd just like to inform members of CIT and Calabar District and Society, Calabar District Society, that there will be a dinner and award night this evening here by 6:30 p.m. Other information, closing remarks by the chairman will come after lunch. It's already late for lunch, so we'd like to ask that we have lunch. While we are having our lunch, we'll take the communique, take the closing remarks by the chairman, and then we have a special prayer by Mr. Adie. Thank you. Okay, I think the chairman's remark will be going on as we move for lunch. Thank you.
Distinguished ladies and gentlemen, distinguished taxpayers, on behalf of the IRS and the Chartered Institute of Taxation, we want to say a very, very, very big thank you for all of you participated at our 2021 Tax Week. We thank the panelists, the speakers, the moderators. We thank members for the fantastic turnout. We thank all those who joined us virtually, physically. I believe it was a wonderful learning experience for all of us. We learned from you, and we hope that we all learned from the various speeches, lectures, and talks we have. So on behalf of the service and the CIT, I want to say a very, very big thank you. We ask God to grant us joining mercies to our various destinations. Thank you very much. Okay, I believe the communique is being worked upon. So let me invite Mr. Adie to give us a 2-minute prayer, economic prayer.
Ladies and gentlemen, good afternoon to you all. I have the privilege to offer a 2-minute economic prayer as registered. First, I want to say that, yes, that is a veritable opportunity for economic restructuring in Nigeria. There are many ways of catching a rat. I am an African, and I still remain an African until tomorrow. I was just saying that in Africa, we say that there are many ways of catching a rat. Rats will not have only 2 openings. There's where they dig the hole to get to where they settle. There's an opening where if they want to escape, they will escape through. So either you go through the opening where they dig the hole to go and settle, or you go through the opening, the escape route that the rats have. But first thing I want to say is that love is the greatest of all. I pray that in our country, Nigeria, we should first of all love ourselves. let us allow ourselves to grow at our pace and contribute to the Center for International Services. As we say, there are some international services. I want to say that VAT, in a way, to some extent, constitute double taxation in some valuable items. A case in point, and the origin of what we call today VAT, sales tax. In Lagos, we have sales tax. In Cross River State, we have tourism development levy. If the chairman of Internal Revenue Service, having gotten so tired from the office and walked to somewhere to take a bottle of malt, he's going to pay VAT on it. Where he sits to take that bottle of malt, they will also deduct, they will also charge tourism development levy. So as far as the hospitality industry is concerned, VAT constitutes double taxation in that area. Now, we have been preached to that it's so difficult to start the collection of VAT. Like the distinguished panelists agree with even the paper presenter, there must be a point. And we always hear that necessity is the mother of invention. Let all of us return to factual setting where FRS started with the commencement, with the collection of VAT. All other states will start at that point. Now, so much has been said. When we all go back to our various states, if we are running a true federalism, we will all survive. There is no state that is disadvantaged. Whereas in Kano, a trailer load of drinks will be broken, will be destroyed, and then they share from the VAT. But in that Kano, let me say Zamfara, when we extract, I'm from Zamfara State, when we extract, when we get gold, nobody hear about the gold. Nobody is hearing about gold in Nigeria. But we are talking about VAT. Please, my prayer is that we should love ourselves and really pray to run a true federalism. When we say some international transactions, there's no transaction that doesn't have a final destination. If somebody in Calabar is importing a car, I know that the ship will get in Lagos, but that car will get to Calabar or Makurdi. So we will trace that international transaction to its final destination. So I stand here to say that no state is incapacitated when it comes to ability to collect VAT. Even those, Ngige, our Minister of Labor, said that Nigeria has so many medical doctors we can export. So those states that don't have the expertise, like Zamfara State, where I come from, we can import expertise for VAT collection from Lagos State. And Lagos State will earn foreign exchange from my state, Zamfara. So I stand here to ask us to go in prayer. Let's seek the face of God. That we should stop deceiving ourselves. As we are here gathered, the problem is not me and you. The problem is the next generation. How are our children going to fare in this kind of setup? Oh, some people say, okay, you go through the normal procedure, go to National Assembly. When you get to National Assembly, can we be bold to beat our chest and tell ourselves the truth? You go there, the game of number comes into play. That a majority. So when do you think that the National Assembly would vote for VAT to be collected by the states? When majority of the states that benefit from the VAT collection, they are the people that have the numbers that will insist that, oh, the federal government should collect. Please, I stand here to disagree. I can be I can be searched for after this, but let the truth be told. Please, let us run a true federalism. Oh, somebody said Benue State there is agricultural. Nothing stops Benue State from insisting that you must not carry a tuber of yam out of Benue State. That the people should look inward and set up processing factories. Convert the yam to yam flour. By doing so, you will have added value that will attract VAT. So, in effect, Benue State may become one of those states that collect so much VAT. I want to appreciate the paper presenter at the beginning, I was really going to be angry with him, because in Africa, we also believe that where a man moves to, his shadow follows him. I know that my boss has been, the other way, but towards the end of his paper, he became the real gentleman he is. It's from the beginning I nursed fears. See, there are options. By the time we increase the derivation, if that is the option, that okay, every state that generates VAT, take 60% of it. Believe you me, Zamfara that generated in M, that's in million, will now start thinking deep how to get items that will qualify for VAT collection. Because if its VAT collection increases, it will stand to have a big chunk from the VAT distribution. So, ladies and gentlemen, let the states collect VAT. That's my own humble opinion if we're in the debate. Why? Consumers, the final taxpayer when it comes to VAT is a consumer. And the consumer has a residency. The consumer is resident somewhere. So if Cross River State is just 4 million, so Cross River State have about 4 million consumers. If Kano has 10 million, Kano has 10 million. So they should, like my brother and mentor Wike said, if you have the population, it's a consumption tax. So you should bring in more VAT into the pool for distribution. And we'll sit here and say, no, because they are in they have a port. What stops Cross River from opening a port? There is a Navy whatever to be, that's a Navy, how do they call it? Kind of what we have an answer here is to be open somewhere that there's no river. So we have inland ports in Africa. So inland ports can also be open in the various states that don't have access to the sea. Today, there are planes that carry heavy weight, very, very heavy weight. So those planes, they could carry containers of cars straight from wherever, Japan, and land in the Zamfara. And so, what you say, international trade, and my argument is that whatever international coloration they are giving to it, there is a final destination where that item is landing. So if there is an inland port in my state, Zamfara, we can, in Zamfara, for us to get VAT revenue, we can open an inland port in Zamfara, and cars could be flown and land there, and we collect the VAT there in Zamfara. So please, ladies and gentlemen, we say this is a classroom, the issue is prejudice, but let us be sincere to ourselves so that we will not leave a bigger problem for generations coming. The way we are going, this VAT to me is they were trying to catch a rat from the escape route, because we have tried several ways of seeing how we can call ourselves to order so that we grow sincerely, and at our various levels, we have been deceiving ourselves in this country. So if Kano has 10 million, its consumption, let them consume so much so that they will have so much VAT. And then leave us in Cross River State that are very few to have small VAT. Again, I think it's a challenge. By the time we start encouraging ourselves to grow at our pace, they say necessity is the mother of invention. I want to let us know, or some of us know, but I want to remind us that petrol, that's petroleum products, is not even the highest end in the international market. If you compare a ton of petrol with a ton of palm oil, the price of a ton of palm oil in the international market is higher than a ton of petrol. And the country Nigeria, the southwest, the south-south, the southeast, the north central, in fact, there is palm wine in Plateau State. So that's 4 regions. The land is good for palm trees to grow. So what stops us from going back to agriculture? Where are the granite pyramids? Where are the pyramids? Like the distinguished panelists said, at the end of every month, We go to Abuja to collect handouts, and we go back. Nothing is happening. Today, those of us who drive through Calabar Ecom Road, when we get to BSA somewhere, your eyes can only see as far as it can take you. When I see that plantation at Ebaye Palm Estate, that's a private investment. But all of us here sit some of us are privileged to come from where there's so much land that we can plant palm trees. And the species of palm trees we have today, after 3 years, is bearing fruit. Those of us who use this road I've mentioned, when those palm trees were first planted, just 2.5 to 3 years, you see it on the ground and it was bearing, you were seeing bunches by the side. The Malaysians took the fruits, the seedlings from Nigeria, and the Malaysians want to come back and let us know that, look, we still have this capacity to grow that sector of the economy. Please, let us restructure. Let Cross River State collect its VAT, and let me that come from Zamfara collect my VAT. If the VAT I get in my state, Zamfara, is too small, I can have something from the gold that I have there to make up for the VAT that I have so small. And sometimes I'm also from Kano. With this big population I have in Kano, we are consuming, we are not living without eating. No man survives without eating. So once we are consuming in Kano, forget it, we will have the VAT. So we don't, those of us in Kano don't envy Lagos. We don't envy River State because VAT is consumption based and we have the population to our advantage. It's even said that Kano is more populous than Lagos State. Until tomorrow, I beg to disagree. And please, let's tell ourselves the truth. Don't be afraid of me that come from Zamfara. The population we talk about there is political population. It's political population. I said the third time, it is political population. Let's be sincere to ourselves and do what we're supposed to do. Now, the informal sector, they answered very well. There's no problem if state is to collect VAT. It's only who should collect it that becomes the issue now. They don't have any problem at all. But my problem with IRS is that it is only those of us who are on salary that you can easily tell what our income is that are paying tax. For no fault of theirs, because our information system is not good at all, they cannot be able to trace those who are in the informal sector. It's a challenge. And that informal sector constitutes not less than 60%. So we call it bottom millions. There's actually bottom millions lying to be collected. But I want to ask or suggest, is it possible? They are still eating now. They are still eating now. Okay. Okay. Is it possible for revenue agencies to secure the order that banks will be mandated to send in a list of their customers? If I walk into the bank to open an account, definitely now they ask me for my BVN. TIN number. So is it possible for banks to feed the revenue agency with a list of customers and their BVN number? For Federal Inland Revenue Service, they have the software called McKinsey. They can sit in the comfort of their office and view your bank account statement. So that Internal Revenue Service will be able to know whether Mr. Deere had any income somewhere, and they very politely invite him, say, you've not declared this, come and pay your tax on this. Ladies and gentlemen, this my brother doesn't like me. I wanted to talk till we finish eating, but he's telling me that there are two other people that want to say economic prayer. Thank you so much. This session is very beautiful. IRS, we need more of this, please. Thank you.
Thank you. Mr. Adie from Zamfara. Okay, distinguished guests, ladies and gentlemen, we are once again reminded of the award and dinner night later this evening at 6:30. While we wrap up, I'd like to invite the chairman of the communique drafting committee to please step forward and present the communique. Thank you.
Good evening. I want to thank all of you for participating, and I will place on indulgence to stand on the existing protocol. Here is a report of the drafting committee. I was just said, communique issued at the end of the 2021 annual tax week of the Cross River State Internal Revenue Service in collaboration with the Chartered Institute of Taxation of Nigeria, Calabar and District Society, held from Monday 11 to Wednesday 13 October 2021 at the Nebula Hall, Azari Hotel, Mutala Highway, Calabar. The 2021 annual tax week commenced with a tax payer sensitization through education, and the following papers were presented. 1. Taxpayer compliance statutory obligation for individuals. 2. Recent changes in tax legislation. 3. Implication of Finance Act 2020 on personal income tax. 4. Should state collect VAT? The papers discuss the essence of tax compliance together with the right, responsibility, and the demand of tax law on the taxpayer, tax administrator, and tax practitioners. The papers further discuss amendment to tax laws from 1992 to date and explain the areas that created ambiguities for taxpayer, thereby enhancing their knowledge and capacity for tax compliance. A team of seasoned tax administrators and practitioners attended to the question and answer from the participants and share more light on the topic discussed. Arising from the above, the following consensus were reached by stakeholders that 1, individuals have a constitutional obligation to declare their income honestly and pay their taxes promptly to the relevant tax authorities. 2, tax authority must continuously educate and enlighten the public on their rights and obligations. 3, taxpayer and practitioner must be treated with high esteem. As the saying goes, the customer is the king and queen. 4, government should show more accountability and transparency on the use of taxpayers' money in order to encourage voluntary compliance. A tax for service scheme was recommended. 5, individual taxpayers and groups have a right to demand accountability from government on the use of taxpayers' money through their various representatives. 6, tax authorities should be more professional in the discharge of their responsibility by ensuring that competent and professional staff are engaged. 7, tax administrators and practitioners need to be trained and retrained to understand the changes in legislation, business dynamic, and peculiar in different sectors of the economy. 8, tax practitioners and other professionals should, as a matter of responsibility, ensure that their clients comply with all tax responsibilities, as well as having compliance issues discussed at the board and decision-making level of the organization where they serve. 9, tax authority must embrace technology in compliance with the provision of the Finance Act 2020, particularly in the receipt and acknowledgement of correspondences. 10, tax authority must put in place structure and process to begin to comply with all the provision of the Finance Act 2020. And 11, and not the least, since the issue of who should collect VAT, value-added tax, FRIS, or state return revenue is at present before the Court of Appeal, the answer shall depend on the determination of the suit in the court. If this is so far what the committee were able to put together, and we want to call on you, if you still have additional input that you need, we consider not capture in our report, feel free to send to us using the IRS email that will be forwarded to you. So this is finally joined and signed by all the members of the committee, representing it on the name of Matthias Ashibasheba, the chairman of the committee, and the secretary, on behalf of the committee members. Thank you for giving us this opportunity to give this stuff.
is locking the shop again. I think those tax people are here and he is running away from them as usual. The last time I confronted him, he confided in me. He said he had paid to some men wearing red t-shirts. According to him, it was cheaper and they gave him a fake manual receipt. As for me, Naimeka, man, there is no need to run. I pay my tax right here from the comfort of my shop. You don't mean it. Make we pay our tax.
Yes, so be like a maker. Pay your taxes at any commercial bank close to you, Crutech, Ekondo, and Unical Microfinance banks, or via POS at IRS offices. You can also pay your tax online via quickteller.com/CrossRiver MSA. Collect your e-tickets immediately and obtain your receipts at CRIRS office. Don't pay money to anybody. Pay your tax with ease. For more information, call 0802-567-0608 or 0806-627-6829. CRIRS. It all starts with your tax.
This message is brought to you by Cross River Internal Revenue Service.
locking the shop again. I think those tax people are here and he is running away from them as usual. The last time I confronted him, he confided in me. He said he had paid to some men wearing red t-shirts. According to him, it was cheaper and they gave him a fake manual receipt. As for me, Naemeka, man, there is no need to run. I pay my tax right here from the comfort of my shop. You don't mean it.
If we pay our tax. Yes, so be like Emeka. Pay your taxes at any commercial bank close to you, Crutech, Ekondo, and Unical Microfinance banks, or via POS at IRS offices. You can also pay your tax online via quickteller.com/CrossRiver MSA. Collect your e-tickets immediately and obtain your receipts at CRIRS office. Don't pay money to anybody. Pay your tax with ease. For more information, call 0802-567-0608 or 0806-627-6829. CRIRS. It all starts with your tax.
This message is brought to you by Cross River Internal Revenue Service.
Can you hear me? If you can hear me, we are pausing transmission now and we'll continue by 3:30, by 6:30 rather, 6:30. So we'll continue the award night by 6:30. So you can still join us by that time. So we are signing off now until 6:30. to award night. Thank you. The meeting is ending in 5, 4, 3, 2, 1.